Hey, Shotty Rinson, Dylan Brooks. Alright, so we're streaming. This is like day 4, I think. Try to stream it on a Tuesday. You know, it's either gonna be, I forgot what it was. That quote, it was like day 1 or one day. Yeah, day 1 or one day. I was like, you know what? I'm gonna start it today. I'm not gonna make that one day. I'm gonna make it today. So we have pretty much here. We have CPI. Did the stream finish? Why? Oh. I mean, not CPI. We have GPP with retail sales. That's what I was watching this morning. So, and I was gonna go over my charting. Basically, Dixie, what we expected was for higher prices, of course. But if we can't hold this inversion, again, it's in a premium too. If we can't hold it, then of course I'm gonna be expecting lower prices. Probably taking out the previous day low and hitting the weekly buy side imbalance and making this an inverse. If we can't hold that inverse, and of course we have multiple sell side imbalances, so it just looks like to me we're going to be dropping, in my opinion. And then for Euro USD, we can see Euro is looking like he wants to rally because it just can't seem to close below the previous week low. Then we came and tapped into it. Euro is stronger than GU, of course, so, and then GU took out the previous week low too, so that is something I'm watching. And then we have short-term bullish movement was created right here. We have a intermediate high, I guess you can say, and then eventually we have that premium wick consequent encroachment. I want to see if we turn this sell side imbalance into an inverse. I am kind of expecting, I am more lenient on the higher time frame to be more of more bullish, so that is kind of playing into my narrative. And then again, Dixie had that inverse fair value up in the 4 hours, so did Euro USD. You can see we ran right through it and we respected it as soon as we came back down. So I'm going to be watching these price levels, of course. And of course, you can see that SMT divergence there. You already took out the high while GU hasn't. So GU, if we continue to rally, I will be expecting for GU to take out these relative equal highs on the 1 hour. So let's go look at SPX. SPX today, you can just see we're getting close to that monthly low. If we close below this monthly low, that is going to be very good indication that we're going to continue lower. But we already took out the previous weekly low. So I'm going to be seeing a TGIF setup today for the indices. And then, yeah, no, just it overlapped with the previous day low and the previous week low. So the inversion, again, another good level. But I want to see if this can act as an inverse. This kind of wick consequent encroachment. We can tap into that and then drop maybe. So I feel like today is going to be a little bit of a small range on the indices. And then 2 up close candles. What does that make in order block? Because we close below it. So it's a change in the state of delivery. It's in a deep premium. So I'm going to be seeing if we can come back up there. If we do, then drop. I would be more lenient to shorts, but you know, it's a TGIF, so we gotta catch back the retracement of the weekly range. So it's a day where I kind of want to be more on the sidelines since we are already up on our objective for the funded. We got a drawdown. We're up 1% on the 10K. So I am gonna be more lenient for viewing that market. And no, that's pretty much it, man. You know. I don't think I want to be putting risk on the table when there's no need to, you know. Especially on a day like this today, you know. It's a pretty easy day. I don't think you should be putting risk on the table. It's not really worth it, in my opinion. Shotty Rinson, Dylan Brooks. Alright, no, so we can see here, Euro's going up. These are not really going up. I'm going to draw the TGIF here for this one. I'm going to draw TGIF. TGIF. So that would be the expected retracement level. Probably around, yeah, the discounted wick. So we're going to be seeing if we can catch some longs here, of course. So we're going to be waiting for the New York session to start up. It's starting up right now. So that's kind of a good indication here. So what do we see? We have an inversion fair value gap here on the 15-minute time frame. Looks like it held respectively. We did sweep some relative equal lows down there, and then eventually we started to rally up. So that was a good indication again. On the 1 hour, I want to see this become an this become an up order log. Down close candles got to be respected for pushing price higher. That's pretty much it. So let's go look at NQ and ES on the 15-minute time frame. I think this one created a higher. Yeah, and this one created a higher high. Let's create a higher low. It's on the 15. Let's go to the hourly. Hourly, did they both sweep those lows? They both did sweep those. No, actually, NQ never swept these lows right here. Well, these swept them. So yeah, no, hourly is giving us. NQ looks stronger. ES looks weaker, but again, on the 15-minute though, it's a little different. Actually, no, it looks a little bit the same. So ES is rallying while NQ is dropping. Let's go see the TGIF here on this one. I would be inclined to trade Forex, right? But damn, I got so many levels here. I would be inclined, but it isn't ideal for me right now, if I'm being completely honest. Especially with how Euro's moving, and like we're having a change in the state of delivery. So no, yeah, we had a 1 hour inversion fair value up there. I marked that yesterday, ran through it, came back, used it. Support. GJ back on the 4 hour inversion fair value gap here. I want to see if we can maintain our form for lower prices. GBP USD hitting that buy side imbalance on the daily. Pretty sweet. Oh no, it's a 4 hour imbalance. I don't know why I put daily. But now we're going to be seeing if that holds. NQ, I think NQ's got room for upside, man. Same thing with ES, but I usually like waiting until like 10 o'clock for that 9:30 opening range to pan out. So that's kind of what I'm watching now. Again, TGIF setup today. That's kind of what I'm aiming for. No news, no none of that. Da 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 na 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 da na 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 da na da na da na. How many pips is this? 6? Okay. Already better take out that high up there. So better be watching this. Take out this high. We are below midnight. Oh no, we're barely crossing it for again, both of them were barely crossing it, so that is a good indication here. We were inside of a premium. Now we're gonna go back up to a discount for this type of upside day, basically what I'm trying to say. If it was bearish, of course it would be the other way. We are up 1% on the objective funded account here. I am not going to be trying to risk too much, I should say, today. I'm going to try to play a little bit more passive aggressive. Not really even risking that much, just being patient. And just today, just really enjoying today. Not really trying to force anything, trying to force my hand. Today would probably most likely be a tape reading day, if I'm being completely honest. If I don't feel fully inclined, because yesterday we took a C class setup, and then eventually we took an A class eventually at the end of the session. But yeah, I don't want to be putting too much risk on, especially with that Euro trade yesterday. It really wasn't a good trade. If I go to my journal right now and I show y'all, I will kind of feel embarrassed showing y'all that trade, but we made up for it with the SPX trade. That one fully put it out as a drawdown, up 1%. So we are up 1%, and I just want to maintain, just continuing to improve, I guess. I don't want to have that fear though of like making a bad trade, even though it's still a winner. I want to just continue improving on my trades, and I realize that you can't have fear. You can't have fear when you're taking that trade and have a big stop loss. Something I noticed, but just see perfectly the price delivery. We're still yet to take out these highs in this up here. We're bouncing off the previous day low and the previous week low, so we'll just be watching that. And then NQ's previous week low is all the way down here, so I think NQ really has more room for upside. So okay. Then ES right now, in my opinion, I feel like it's bound to rally up. Look at that perfect delivery. If we break above these highs, that would be a good indication to me. You can just see on the 15, yeah, it's a big wick to the downside, and then we're just moving up. So it just looks really nice. Really nice delivery. I do think we're gonna rally. As you can see it, Let's go look at the euro pairs. We're hitting that premium wick consequent encroachment again. We did hit the daily one and then we dropped, so this would have been a nice trade idea. I wasn't able to be awake for it. I woke up like around like 7 o'clock Central Time, so this would have to be like 6:45. Damn, that'd be early. Around there, like 6:45. So as soon as I woke up, I'll probably have to look at the chart and take the trade right there. Nah, I'm not doing that. I'm not doing that, man. I can't. I gotta do my morning routine. Like right now, I did my morning routine. I feel really rejuvenated. I feel like I'm ready to take a trade. What's TGIF setup? Basically what a TGIF setup is, whenever the weekly candle, it comes back into this side, the 0.2, 0.3 range after hitting a PD array on that higher time frame. So the PD array for me on the higher time frame will probably have to be previous day low, and then probably in for ES the previous week low. So I feel like we're just bound to retrace. That's what I'm looking at. And then eventually, if we have SMT, which we did, it seems like ES is more weak, and then NQ is more strong. So I just see us going up to the upside. But I'm still, again, I don't want to take a trade today because I'm already up on the funded, and it's a Friday. It's the least probable day, aside from Monday. Monday and Friday are just very probable low days for me, and I just prefer Tuesday Tuesday through Thursday. Those are like the highest probability days for me, and I just win the most there. So we're just gonna be seeing here the inverse got respected. Seems like we're rallying up now. I want to see if we can close above this, especially on the 5 minute. That would look really nice. We got 2 minutes. So seems like NQ was close to taking this out. NQ already took both of these highs out. ES never did. We still got a couple of minutes to 10 o'clock. I would prefer a 10 o'clock trade. They're in silver bullet, of course, and of course to the upside. First objective will probably have to be these highs for NQ. For ES, same thing. Probably taking it on ES since it is the lagging one would probably be an ideal scenario. But if you catch it early on NQ, then that would be very optimized. So, okay, let's see. GU, I think we dropped on GU. We're still in the weekly buy side and balance. Seems like we are holding it, of course. It's really a big doji candle. I think we're like above in a premium already. Yeah, we're up in a premium. I want to see if we can maintain our form up there. If of course we do, then that means higher prices are coming. Ideal scenario for us to reach are probably this rejection block. I think this one's above it. Yeah, this one's above this one. So probably a rejection block here. Take that as a liquidity area right there for me. And yeah, the bodies are respecting it. Same thing with which one was it? Which one was it that had all the bodies respected? I forgot. I gotta go look at my journal. I think it was dollar index. No, yeah. No. I don't know which one it was. Why is this one on the daily chart? That's what I mean. I gotta keep my chart clean, man, especially on these higher time frames. So dollar index is, bro, we're just still inside this buy side imbalance. To me, it just seems like we're just gonna drop soon. I don't know. I feel like we already hit that premium array, that premium actually. But for the pairs, we haven't. That's something I am watching. I would prefer us to come down a little bit more in the pairs. But if we can't even close below this monthly low, then that's gonna just seem to me that most likely I'm just put the next one high and low. If we run through the high, of course, I'm just gonna be looking for longs. If we closed above that high too, then I'll just be looking for longs. For the S&P though, or Nasdaq and the S&P, we are still inside of this buy side imbalance. So if we close below it, I'm gonna be looking to these order blocks and then these relative equal lows in the premium. The discount. If we close below this monthly low, of course, or this monthly buy side imbalance for sure. So yeah, that's pretty much how I'm viewing the market right now, from a higher time frame to the lower time frames. I wouldn't mind if we come and just take this out right here, and then we start to rally. If not, we start dropping. This would look like a clear market maker sell model here to me. And of course the TGIF will probably be invalidated, and then we'll probably target these lows. Of course we close below these lows and we start using this inverse as a as another inverse, I guess you can say. It's like a BPR. NQ is dropping. Let's see how it reacts to the sell side imbalance. Of course, we're about to hit 10 o'clock in a couple of minutes, so I am watching that. I don't know if the euro pairs, I just don't know if I wouldn't want to trade this. It seems reasonable to trade, but it's not ideal for me. It's reasonable, but it's not ideal for me. Look at the wicks. The wicks usually do the most damage, like ICT talks about. So this is just very, 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 sloppy price action. And then there's a cracking correlation. GU is going up while EU is going down. So big SMT divergence there. So it's a very risk-on scenario. So we are respecting. We did okay. We are rallying now. I'm gonna go look at EU and GU. Looks like a very big, yeah, it's a big SMT, man. Big, 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 big. Let's go on the hourly. It's probably there. Yeah, it's definitely there on the hourly. So this low right here created a lower low, and this low here created a higher low. So that just goes to show GU has strength. I can see GU taking out these relative equal highs, bro. Like all these highs up here, and then EU already took them out. So it is kind of it kind of was expected, honestly. Just seeing those, and you can see why NQ is kind of more to the upside than ES right now. I think they're the same though. They're the same in correlation, so it's not risk on. I mean, yeah, it's not risk on. It's kind of risk off. It's a good trading day, honestly. 4 TGIF. I mean, real. Just waiting for more of the range, I guess, the opening range to come in, do its role, and see at 10 o'clock where and how we can probably trade the market. This market maker model's everywhere, bro. This market maker buy model. This could be a market maker sell model forming. This was kind of a market maker sell model. I would prefer this one though, because it just had more of an objective, and we met that. You can see that. Just looks very nice. Can't unsee it. Especially, I was looking at GU and I was like, man, this looks like a market maker buy model right here. Right here. I was like, damn, this looks like I can pull up the charting, guys. Like, I swear, bro, it just looks so clean to me. Especially just let's see, bro, it just looks so clean. See that market maker buy model? Even on the 4 hour, it just looks very ideal to me. Of course, that's kind of why I was like, man, this thing looks good for longs for GU. I was like, damn, maybe we should do some longs, I was thinking to myself. But again, on the 4 hour, it just looked really nice right here. But it came really low. It came really down to the downside, bro. So, this isn't really a retracement lag, in my opinion. It's really just sloppy price action. That thing is sloppy. It just came all the way down, hit an order block, I bet, just rallied. Very, very, very sloppy price action, of course. So we are rallying now. Having a really tight range today. You can just see the ES, NQ already took out those highs. ES hasn't, so just goes to show NQ has very, 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 very strength here. We'll pull up the Discord, see if anybody took trades. We are dropping, so it's back and forth movement now. It's really just not even a range bound. It's more consolidating. So that's what I'm looking at. So yeah. Someone tried to join the Discord as me. Someone tried to join the Discord as me. Like, what? I made it, ladies and gentlemen. I have a copycat. I have made it. So we're just gonna see. I just really want to see us. I don't know. I just want to see us come down more. I would use an ideal dealing range, but I prefer like a 15-minute dealing range. It's kind of more intact for me. We'll use this side. Should I use this high? It's more like a standard deviation high, I think. I'd kind of use it. See with the projection, since this was manipulated with the low taken out. So the 2.5, yeah, this level up here, but it's kind of past TGIF, so you're gonna see. We are dropping now. NQ dropping. We're about to hit that 950, 1010. Oh, we are hitting that 950, 1010 macro. So let's see, ladies and gentlemen, if we can. I feel like ES is about to take out some form of liquidity. This low right here got purged already. So maybe this could be the one. Okay, let's see if we can purge this low and then start to rally up. NQ is looking like he wants to rally. This might be a good TGIF day, man. TGIF is maybe here. Oh, I feel really warm in this jacket right now. Feel good. Feel cozy. So we are rallying. Okay. Okay, I like to see that. We'd love to see this, man. 950, 1010 macro. We'd love to see it. Just be a little bit more patient, bro. Be a little bit more patient. Let the market do its thing, you know? Need more of a range. Come on. That's something I'm trying to work on, ladies and gentlemen. Just working on the market, having a little bit more of a range. You know? Because I'll be loving you. That's all I want to do. I'll be loving you. Let's play some music, man. I need some music. I'll be loving you. Right here. What else should I play, ladies and gentlemen? That's all of my music I got. Let's play some MJ. This gives me good vibes, bro. Just listening to this, man. This whole album, Escape, was the masterclass for sure. Alright, I'm just watching to see if we can. Okay, let me put this on. Alright, I'm just watching to see if we can respect that. If not, respect this one down here. Of course, I want higher prices. So, ES looking like it's the lagging one. Maybe this is a good trade idea here. I would kind of wait more for. I'll just be a little bit more patient, I would say. You know, I'll have to wait for more confirmation for the upside movement. So in SPX taking out these lows and Q never took them out. I'll be waiting to see. You know, we can start rejecting that and going higher. This would be a turtle soup SMT entry, of course, but looks like we are rallying a little bit lower. Okay. So NQ already took these lows out, but ES never has. So I'm gonna be watching that, you know. So NQ already took out these lows. ES never has. It's more of an ideal range right here for NQ to be in. Yes, I'll probably mark out this range. So we're inside of a deep discount. This is again why you don't want to enter strictly off of that. You want to wait. We're still hitting that macro. We're like about to hit halfway of the macro. So I'm just waiting. So purge this one too. Oh no, wrong one. I want to take out this little one. So we are rallying now, I guess you can say. Big rally. Big candle, you can see. Respected. Turtle soup, maybe. If we continue to the upside. If we come down, hit this order block. I mean, if we close above, that would give me a good indication. Let's go to the 5 and the 15. 15 minute looks like, yeah, it's respecting it. 5 minute looks like it's respecting it too, you know. So looks like it's a really good indication for higher prices to me. You know, a very ideal entry would probably have to be more inside of a discount again. So if we dig deeper into the order block, then I'll kind of consider taking an entry, of course. So, but we aren't looking like we are respecting the SIBI, and then this is more like an order block too. So, I would have to probably be more lenient to the upside. You know, seeing more movement up and then eventually coming back down. And then we'll take the entry there and probably have our take profit to the TGIF areas. So we are respecting this down close candle and changing the state of delivery, of course, with up close. So, I just want to see how the SIBI is being tested as. of course, for the SMT. Just NQ looks very strong right now, so it looks very probable to me, honestly. That we're gonna rally. It's kind of simple, bro. Like, it looks very, very probable. Like, why wouldn't you want this? Let's play some. It just looks. If it doesn't happen, then it doesn't happen. Maybe this has a SIBI lower, so this one has a SIBI higher. This one has a lower. Probably the consequent encroachment has already been hit multiple times. Yeah, we are respecting it, so that's kind of why I wanted to wait. I want to wait more, see if we disrespect it. We respect these turtle soups to go higher. That's pretty much it. 1 minute turtle soups, turtle soup warriors. So we're gonna see this consequent encroachment on this mean threshold here. Be tapped into, see if we can start to rally. I'm about to look at the 15, of course, and the 5 minute. So 5 minute down close candle right now. We're just rallying lower. We're about to hit this consequent encroachment of this 5 minute wick. Of course, respected it. 15 minute. No, this one has 3 minutes. It's okay, about 3 minutes. Okay. So yeah, we have 3 minutes, 3 candles after this one, I think. Oh no, it's 3 candles now. So, we're still in that macro. I'm just watching. And then NQ, NQ is looking higher. I want to view both at the same time. So maybe upside movement isn't as probable right now for NQ. Looks you right into your eyes. You're very alive. 'Cause this is Thriller night. And no one's gonna save you from the beast that might strike you. Thriller night. For your life inside a killer thriller tonight. I didn't mean to do that. I was yawning. Let's move this over here though. Oh, slam. Realize that don't want to have to run. Damn, I got a neck cramp. I could feel it. Shit. Feel my neck are cramping up right now. So NQ is looking like it's respecting order block. Yes, it's digging deeper. I wouldn't like it to take a trade here. That's kind of why I wanted to wait, man. You gotta wait for these levels start being hit. Damn, I got a neck cramp, bro. I can feel it. Just straining my neck, bro. This is thriller. So we're still below that mean threshold. Doesn't look optimized or optimal. SIBI respected. But a bunch of wicks, you can see that. Oh, my neck. So we are having that correlation now. Damn, I think I messed up my neck, bro. Just freaking dancing. So we are still respecting this buy side imbalance, even though we did close below it. I still view it as a buy side since it's more like a balanced price range. We took it out and we went higher again. I'm gonna lay back a little bit. Drop, lay back. Okay. So the macros is about to hit his halfway point now. The 950 10 cent macro. I wouldn't mind if we take out that sell side down here. Again, this did look like a market maker sell model. I think I was stating that earlier. Looked like a market maker sell model. We just sell off, even though I do want higher prices. But again, that's kind of why I'm not putting risk on the table. Friday's more of a low probable day for me. I think it's for everybody, honestly. But if you are able to just be flexible and adapt to the market environment and just trade both sides, then of course you're gonna win. I'm more of a lenient towards higher prices because of TGIF. But if we don't get that, then of course that's perfectly fine. The market doesn't care about no setup. It just does what it has to do. So, yeah, that's pretty much it. I feel like NQ would have been a better market maker sell model here because of the. Let me put it up, man. Come on. I'm gonna just have to do this. It looks more probable because of that sell side imbalance with the order block. And then you already had a market structure shift. Again for this one too, but it didn't reach, deep enough. And if you draw like 50% of the range, it never came up near it. So NQ would have been a better sort just because of the premium price, and then eventually hitting the consequent encroachment, respecting, and then just lower prices wanting to be there for sure. Just this dealing range though, of course, we're in a discount right now. So, but if we take it out, that's completely normal since we are in a market maker sell model. We can probably use this as a inverse if we start. Okay. Thriller. That's good. What did I have? A notion. So we are starting. It's more like, yeah, you see why I don't want to trade this. I don't know if you can zoom in. Let's focus. Dun, 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 dun. So Euro, GU, IQ. Just reading the tape, bro, is honestly one of the best things you can do. Not like the order flow, but like just reading the candles print. If you're an ICT trader, you want to be doing this. I think this is sometimes better than not trading, if I'm being completely honest. Like if you're just watching the market print its candles, you have certain levels, certain time elements, and of course you're doing a top-down approach. You're just watching the market print. It's probably one of the best things you can do. You can see here. Immediate rebalance if we do hold above. To me, yes, yeah. We purged all this liquidity, man. We have an inverse here too, so it's more of a balanced price range now. If we hold, I don't know. I just feel like, I feel like we're just gonna go more to the upside. I just feel it. Hi, good luck today. Thank you, ladies and gentlemen. I try not to read too much of the comments or like look at the live stream thing because I like really to focus in there. So if we hold this, okay. The wicks do damage. Bodies tell the story. That's when we're watching the bodies, man. I don't know. I really don't even want to put risk on because of how much we're up this week. This week we're doing really well, man. This week, bro, honestly, just getting that journal or those notebooks, really game changer. And then using them correctly, meditating, answering questions that I'll write down in that journal, my game plan for the week, how much I want to risk, what weekly profile we're having after Monday, and the news economic calendar. How can we frame more trade ideas during that week? And then how much we're up, how much we're down, our objective for this week. And I already met my objective. My objective was to get out of drawdown. We were near like 4% at the beginning of this week. We slimmed it down to 3%. And then now, yesterday we cut all 3 off and then we made 4%. So we're up 1%. I already met my objective, bro. Like there's no need for me to put more risk on it on the table. Okay, so we made a balanced price range here. So, at this point, I'm going to want to see these lows taken out since we are just not even wanting to respect a deep discount. For NQ, probably just take out these lows right here. That'd be very ideal. Let's go look at Euro. Yeah, Euro and GU, I don't want to trade right now. I'd rather stay away from it. From just even the higher time frame perspective, it looks very, very, very indecisive right now. I want to see how we close on this daily. If we close above this sell side imbalance, to me, higher prices are coming. And then, I'll target the previous week high. But eventually, if we make a new week high, I'm still going to target this one, of course, as an intermediate high or an objective. And then eventually, probably these highs. I even told myself, this might be a market maker buy model forming here. We might have that smart money reversal. And this is all low resistance, some high resistance in there, of course, but majority of it is low resistance liquidity runs. So, you can expect sometimes that level to be, just expecting sometimes to have that market makers buy model, especially with dollar index reaching that premium on the monthly and just wanting to drop. But again, I would probably target like 50% of the range of this weekly range from the high to low. If we do start seeing more upside movement, of course, but if we don't, of course, target that buy side imbalance on the monthly. Take out this daily sell side liquidity with these external levels right here. That's more of the objective right now. Just waiting to see which side of the market we're gonna go to. So that's kind of what I'm waiting for on Euro. And GU the same thing pretty much. Just GU looks a lot weaker, man. My account balance. So. I've been trying to journal like you. It really helped. Not gonna lie, thanks. Got any tips for keeping your charts clean? I usually try not to draw too many levels on the 5 and the 15 and the 1 minute, unless it's like around a higher time frame level. So if I have a 15-minute level, I'm gonna look for a level on the 1 minute near that level. That's pretty much it. Don't try to clutter your chart too much. Like this is kind of cluttering it, but for ES, it's kind of a, I guess because of the TGIF setup thing. But just keeping the chart clean is probably one of the best things you can do, especially doing a top down. Just marking out levels that are just more important. The most important recent levels. Don't try to have every single PD array. Just market the ones that are just beneficial to you. The ones that you can see being used. Like these are all being used this day. I mean this week. I could mark out a rejection block here, or this premium weight consequent encroachment right here. But it's not. You don't have to mark out majority of the time some levels that are not going to be hit in the recent week. Just trying to keep it more dynamic as to what you can expect for this week and what levels can be hit during this week. So we did take out this. The market maker sell model was there. I want to see NQ though. I want to see NQ take out this level for sure. I think you really have to figure out yourself, man. You're gonna have to meditate upon your journaling and like review and like see what levels weren't used and what levels were used and like what levels had the most power, and just keep those on your chart, I guess. Of course, try to keep more higher time frame levels than the lower time frame ones. Don't try to be lost on the lower time frames. That's something I did have an issue with. Just working my way up, I guess, and just using those levels and then stacking layers to the higher ones from the lower, and just sticking with that higher time frame narrative or bias, you can say. That's probably the only real way. I don't think you can really keep your charts clean, if you have too many levels. But sometimes you will probably have to not keep them clean, and that's perfectly fine. They don't have to be super super clean where there's just no levels on there. You can get it dirty, bro, and just as long as you know how to navigate around that chart, because it's your chart, man. So that's all that. It doesn't have to be clean sometimes. Sometimes it'll be messy, and that's perfectly fine as long as you know where and which levels are gonna be respected and why. So yeah, that's all that matters. Your narrative is more important. That's kind of why I write it down. I kind of write down what I expect for the week, so I already know what I'm gonna be looking for. And if it doesn't happen, then of course I'm gonna be flexible and just trade the other way. It's perfectly fine. But for today, I didn't want to take that market maker sell model trade here, even on NQ. Just 10 o'clock already hit. The silver bullet is here. The opening range didn't look too promising to me, honestly. From 9:30 to 10, that's an opening range. It didn't look too promising. And I just see us taking out these lows on NQ for sure. Euro and GU just not even worth looking at right now, honestly. It doesn't look probable for me. I just want to see NQ take out those lows for sure. Yes, already did it. Maybe this is the turtle soup here. Maybe this is turtle soup all along. Maybe these turtle soups weren't magic. Oh wait, no. If we don't reach down there for NQ, that's... Oh, no, we already did, I think. What was the lows we wanted? Okay, no, wait, no. Yeah, no. I want these lows taken out. ES already just took out those lows. I would have wanted more upside movement. Maybe this is where the market maker buy model kicks in. It's like, bro, it's so hard to unsee it. Honestly. From Busta, bro. Busta put me on from yesterday's stream. It's just so hard to unsee it now. Maybe this is where the smart money reversal starts to accumulate. I would want to see more of a range, of course, and then eventually we come and take out these highs. It's simple, It's like this, you know, market maker. You sell side to the curve, buy side to the curve. You can see it pretty much on the lower time frames. On the higher time frames, is there, but it's gonna take out more. It's gonna take more time to print out, basically. So that's kind of why I prefer it on the lower ones. Again, though, on the higher time frame, if you use market makers models, you already know which direction you're gonna be likely going in. So it is probable using it on the higher time frame too. You know, just indicating where you want to go and just following that direction. So I'm gonna take out these. What is it on the 15? What is it on? Oh, it's TGIF. I was about to say, is it on T? Oh yeah, it is TGIF. I was like, man, what is this line here? We're watching both of them here. What happens when we enter silver bullet? I haven't really seen an ICT video where he explains it. No, I think you should watch a video on it, man. Silver bullet is more of a time-based element trade. So use 10 o'clock to 11 o'clock. You find a fair value gap and you enter off of it. It doesn't have to be a fair value gap that was created during 10 to 11, but you know, it's more probable using one of those instead of the other ones. But again, you can, doesn't have to be. Damn, we're just pumping. But you also have to have bias too. Some people don't try to have bias using the silver bullet hour. I would prefer using bias. You know, you're gonna have higher time frame bias instead of not just having any. It's better if you do, you know. As long as you just follow a daily trend, you're gonna be good. If you follow like the daily and the hourly trend, you can just come down to like the 1 or 5 minute. You'll be good, bro. Don't worry. But you gotta have bias. I think bias is very important. So we took out these lows. We already took out these lows. 200 NQ. Yes, already been taking out those lows. This is SMT because these highs. Okay, no, wait, no. This would probably be, this one created a higher low. I mean higher high, this one was a higher low. I'm really lagging on figuring out the higher time frame bias. I mean, if you're journaling like me, if you're like charting like me, I don't think you should have a problem, man. If you're doing a top down from like the monthly, weekly, daily, all the way down to like the hourly, I think you should be good, bro. Especially finding daily bias, because you already know like where the monthly's trying to go. You break it down to the weekly. You're trying to see where the weekly's trying to go, and then if you see how the weekly's planning out with the monthly, you're gonna go back down all the way to the daily. You're gonna see how the daily is respecting from the weekly, being respect from the weekly, and then you're just gonna keep doing that until that you get to the hourly chart from like the 4 hour to the 1 hour, and then try to find SMT on the 1 hour, and you'll be good, bro. Like that's all you really need to do. Do you trade forex? I do trade forex. I traded euro yesterday. It was kind of a bad trade, I won't lie. It was a very bad risk to reward. We traded it during the news, after the news actually, I should say. The news dropped. I was shorted, and my stop loss was all the way right here at the premium consequent encroachment of the wick, and we entered like right around here in the fair value gap. So it came up. I was very, very scared, and just we started exiting at a discount. And if you measure the range here from a discount, it wasn't very, very good. So we started just taking it out right here as soon as this candle started coming down, and it was a very skewed risk reward, bro. Like it wasn't a good trade, you know. I didn't really like it. But for the S&P trade yesterday, it was very, very high probable, especially just PM session offering that good market maker sell model here. We did target the lows with this kind of weight consequent encroachment was our take profit final. We take a profit at consequent encroachment. I mean, of equilibrium of this range right here from high to low. It was very good, and then we started having a chop fest, and then boom, we just broke down lower. I did kind of want to hold for the previous week low because I already knew NQ took it out. I was like, all right, yes, is gonna have to take it out since we are bearish, and we were respecting that inversion. But I was like, man, it's already too late in the session. Well, not really too late, but it was already too late into the day. You know, I didn't want to be holding this trade and holding my mental capital for, you know, all the way down here and just staring at the charts. So I was like, you know what, I'm just cut it right there. So it's right here. You can see in balanced price range almost tapped into. Let's go look at NQ. I'm gonna zoom out a little bit, guys. Zoom out. Yeah, we're just dropping, pumping lower. I think TGIF is not gonna be high probable. Just doesn't look high probable right now. Maybe we come down here. Honestly, if we come down to the volume balance, I wouldn't mind it. I feel like this one is bound to come down here, especially the premium wick. Consequent encroachment. So yeah. Do you? Oh wait, I heard that. How do you find daily bias? Can you provide info? Bro, daily bias. You just really do a top down. That's the only way you can find a daily bias. Like following the monthly with the weekly, and then just going out to the daily, and then breaking it down further and further. It's like breaking it down. Honestly. Do you trade E-mini S&P 500 as CME? I do not. I used to trade futures, but it was more like a demo. I never really tried to prop firm on futures. But I've been thinking about it recently. Instead of like having those forex prop firms that are unregulated, I would, the CME charts are just so much more clean than these CFD charts. So I was just thinking about that, trading futures. You give me gold, E-mini S&P, NASDAQ, YM. It could be whatever, all the future charts are just very clean. Give me gold, oil, all the charts are very clean. Price action is regulated by the CME, Chicago Median Exchange. And yeah, it looks better than CFDs for far light years ahead. What broker do you use? I don't trade it, so I don't use a broker. I'm on prop firms right now. I'm trying to scale my capital up and then eventually start putting it into more of a personal accounts, I guess. And then, yeah, just in regulated brokers. I don't know if I really want to trust these forex prop firms, especially after what happened with my forex funds. But just, some are good, some are bad. You just can't really determine which one are which as of right now. So I feel like that's kind of why we need regulation in the prop firm industry. It wouldn't be bad, just regulating the prop firms. There's too many, man. There's too many coming out every month. It's just oversaturated, honestly. There's too many prop firms. I mean, it's kind of good at the same time because you have max allocation. If you like max it out on like each prop firm, you're gonna be stacked with so much capital. But at the same time, it's how many can you trust? How many are reliable and trustworthy? Because there's so many coming out, and of course, you can trust the OG ones, the ones that have been in the game for a while. But the new ones, I don't know. They're very sketchy. People are being paid to promote it, and you just got to see through the deception, honestly. How many of these people are getting paid, these traders that are creators, how many of them are getting paid to promote prop firms, the ones that are just new, that are coming out, that, don't have so much credibility. They're just trying to provide that credibility by being paid and just saying a good word for them and trading with them, passing it. Yeah, that's pretty much it. You don't know what they do behind the scenes. It could be shady stuff. Alright, so we are dropping. We're hitting that inverse again on GU. EU, I think we hit that 15-minute sell center balance and we dropped. We came up for it one more time. This is not a high probable day, honestly. You can see we just came back up for it and we dropped. Like, you don't know which move is going to start to move. It's crazy. It's a bunch of wicks. Wicks do the damage. That's kind of why I just look at the bodies. Seeing what the bodies are telling me. USD CAD, we hit that buy side on it's not even on the daily, it's on the 4 hour. Yeah, it's even on the 4 hour. I don't know why I wrote daily. The 4 hour time frame, buddy. We swept the previous day low too. This is a high probable trade right here, honestly. Swept the previous day low, and then eventually you hit the buy side balance on the 4 hour. I would have probably, if I was about to take a trade, I would probably have to take this one, honestly, today. Target these highs. I do think we're going to reach there. Dollar's probably rallying, yeah. Dollar's rallying. These are probably going to be dropping soon. I want the forex pairs to be dropping. Probably take out some sell side here. These lows, really too clean. This one probably, what is this? This is the monthly, right? The monthly, no, it's the weekly one. It's the weekly one, yeah. That's kind of close, honestly. On the 1 minute, it looks very close. Damn, I thought it would be further away. Oh yeah, it's clear market maker buy model here. Just perfect. Just very clear and decisive right there. You can see it. Just perfect. Swept. More lows. Market structure shift. Probably around here. Came down, rallied. And then after that, just there's no coming back for the trade. Just big leg up. We're gonna see some retrace maybe, and then another leg up and take out these highs. So kind of what I'm looking at. So ES, NQ, all that. We didn't take out any form of. We did take out some buy side here and some internal. Damn. So like today's more of a good day. Yeah, I just don't see us going up no more. I guess, you know, it was really more of a bearish week, I guess. You can just see it. Again, a market maker sell model here on the 4-hour. It just looks very probable, so that's kind of another reason why we probably didn't hit the TGIF. It's probably coming down for these lows. Maybe this volume imbalance in the next week we take these lows out. Yeah, I see why now. We'll take them off though for sure. It was a good week for sure. It's just coming down, you know, to take out some form of sell side, more sell side. I'm gonna mark these out, take these off. What else? Let's see. Take all this off real quick. Anyway, I ran through this. I kind of let's take it off. Somebody's rushing, but I'm gonna read the chat real quick before I go. All right. Bro, can you provide tutorial to daily buys? Would be great. All right, I'll show you after this real quick. After I come back from restroom. I don't think we're gonna tap into the TGIF today personally, so I'm not gonna take in a trade today. Yeah, no. I'm not gonna take a trade either. The Forex looks sloppy. S&P 500 and the Nasdaq didn't come and retrace up to the TGIF, so I won't take a trade either. It just it's more bearish today, I guess. So yeah, no, I'll be RB though. I'm gonna just use the restroom real quick. I'm back. Alright, I'm about to do how to find daily bias, whatever. How to find daily bias. Alright. Let's go to my journal. Charting. I'm gonna show you right here the S&P, how I found my daily bias today. Alright. So Forex pairs. Alright, now let's go Forex pairs. I find my daily bias the day before I even trade. Just looking through the price action react right now, not gonna lie. Yeah. I'm gonna draw levels out right now. For sure after. So Euro USD. Monthly time frame, we're still below the previous month low. We stay below it for a close. Discount is still yet to be reached. You see on the monthly time frame, if we don't close below this right here, we're gonna be most likely bullish. But if we close below it, I see us coming down to the discount of this range and hitting the buy side imbalance. We have yet to tap into a discount. I prefer the BISI to be hit, the buy side imbalance on the monthly. I prefer us to stab into it, and then we eventually start having higher prices. This is on the monthly time frame. I would want us to come down. So I'm looking more bearish right now for the Euro USD. That's kind of why I'm more leaning on the bearish prices. On the weekly time frame though, it is looking like the discounted wick of this consequent encroachment respected once again. We aren't dropping from the previous week low anymore. So this week I'll be watching to see how we close. If we hold below the premium wick, this wick right here, the consequent encroachment, the midway, I am bearish still. But if we hold above it, then I'll be bullish. So if we hold above this, we'll be bullish. If we hold inside the sell side imbalance, it's very small. So I guess we can come up, close above it, inverse. I'll look to see higher prices. Even though the monthly is telling us bearish, you got to be able to adapt, you know. This again, because we're not holding below this previous month low. If we're unable to hold then bullish prices are coming. It all depends on how we're gonna close. We still got 10 more days after today. But again, the weekly time frame, this is how I find my daily bias. Just breaking it down further and further from a top-down analysis. Daily time frame. Short-term low was created. This is an intermediate low. 2 short-term lows right here. Bullish movement since we didn't take out the previous week low. We didn't take out previous week low. GU did. SMT right there. EU is looking strong. GU weak. And then we are still holding inside the daily sell side imbalance. This imbalance right here. If we want to go higher, we want to at least close at least some confirmation above it. And again here, this one too. Premium weight consequent encroachment. If we hold above it, again, I'm going to be a little bit more bullish for next week. We're going to come down, probably use this as an inverse, and then take out this buy side liquidity in the previous week high. And then, we need to close above it, making an inverse. The previous week high of the previous day is a target too. So this previous week, the premium consequent encroachment, premium wick consequent encroachment, if we close above it, I'm bullish, bro. I'm bullish all the way. For our time frame, we had that inversion fair value gap measured from the high to low of the previous day using session breaks. And, it's in a discount, so we can come tap into it and then rally. But again, I just wanted to close above the sell side imbalance and the premium wick consequent encroachment. Even this one up here too, the premium wick on the weekly, for us to be more bullish than bearish. So yeah, that's pretty much it. And then eventually on the fine SMT here, and then on the hourly chart, it's the same thing. Rejection blocks. Okay, yeah, another one. This is rejection blocks. This can be used as a means of buy side liquidity here. But it's near the premium weight consequent encroachment, so it seems likely to be hit either way from the premium, from like the consequent encroachment of this big wick on the daily, and then these are just rejection blocks. So it's just a liquidity that is being gravitated to very, very strongly. And again here, I want the inverse to hold, or just like anywhere below the sell side imbalance on the daily. If we want to be more bullish, I want to see it tapped into and then eventually hold for higher prices. That's pretty much it. That's how I found my daily bias. 10.19 yesterday, the day before I even take a trade. On the next day, I find my daily bias and what I expect. Let's see. Just looking through. Okay, key show. Okay, if the dollar goes up, then the dollar does the S&P and Nasdaq go down. So this is okay. Yeah, no, this is something I have trouble with. I'm not gonna lie. Back then, when dollar was going up, S&P and the Nasdaq used to go down. But eventually through the summer, when I was trading, I realized that it wasn't happening anymore with dollar and S&P. So I'm gonna show you that real quick with dollar index, and I'm have S&P down here. Just it is kind of correlated, but eventually at one point, they were both going up. It was around here during June. We're both going up and up and up and up. So it broke correlation there. It was on more of a risk on, and then eventually we started seeing that movement lower. So I feel like it is kind of coming back to it where it's dollar up, S&P and the indices down. But it just, I don't know, it just feels like it went more of a it went uncorrelated, and then eventually now it's getting correlated again. So I would probably have to be more lenient again. So you can see dollars looking like it wants to drop. This one looks like it wants to drop. So it's like more of a, I don't know, it just feels like it's just uncorrelated to me right now. I don't know. So yeah. Yeah, we're about to reach down there. I can see us coming down to that 1 hour with that daily. So that consequent encroachment. Even the volume imbalance will be good. Yes, dollar and stocks are opposite to each other. Yeah. As of right now, I don't know, man. Just doesn't look probable. So I just rather use SMT with NQ. So ES and NQ. I don't even use dollar with the indices. I use it more with the forex pairs because it's just more correlated there. But with the indices, I just don't use it there. How long you been trading for? So I've been trading since January, so it's about to come up to a year soon. I've been trading ICT concepts. Before that, I wouldn't even count the trades during from July to August. Honestly, I wasn't even really studying or reading the price every day. Like I wasn't actually paying attention. I wasn't journaling, charting. I wasn't doing the things I am doing right now. It really started January and then February. So January, February. January I took a little. I started January like the beginning, and then towards like the middle of the month till like the end, I stopped. I stopped doing everything. Stopped trading. Stopped doing everything. I started focusing on school, and then eventually February we started doing it, running back up. During the summer months is when I started really focusing on it a lot more. During these months, I was more of a casual trader. I would say. During these months, I've been more, like even to the previous ones, I've been more focused on it, I should say. Started trading 4 months ago. Yeah, that's what's up, man. Let's go look at Euro. So again, you can see just my daily bias here on Euro. If we hold, close above it, inversed daily, sell side imbalance becomes inversed. I want to see what closure above these previous week consequent encroachment right here. I want to see this close above it. It'll give me more of a sign that we are bullish, especially if we can just close above this right here. And then eventually, I would like the sell side imbalance to be closed up like right here, just like around here. You know, it wouldn't be too bad. Just taking out the previous week higher, then we close right below it or inside of it. It wouldn't bother me at all. You know. Put this back up here, and then the monthly power 3 right here. I'm watching the monthly power 3. You can see previous month low. This is the month low right here. We went lower. Now we're going up. We open right here. If we can't stay below this, we can't close on the month, then I'm leaning towards more bullish prices. We already swept all this liquidity down here. So yeah. I just see us on Euro going up, but it's more of a slop fest, chop fest day. GUs. You can see Euro's going up. USD CAD is going up too. So it's more of a risk on day today. Dollar's kind of dropping while this one's going up. So it's more of a risk on. GBP USD respected that inverse again. We tapped into it again from the 1 hour inverse. Just wanting to seem to want to rally. Some clear market maker buy model here. As soon as we tapped into it, fair value gap could have entered. I would have waited for more of a market structure shift like right here. Probably be an SMT divergence with EU and GU. And no, not really no SMT on the 1 minute. No SMT on the 5 minutes. SMT on the 15. Only this one really on the hourly. So I would kind of wait for more of a retracement after we break structure here. We start holding, of course, and then eventually, taking the trade there. Then targeting some high resistance liquidity up here, and then this low high resistance I guess here. So all this high resistance up here, I'll start to target that. But if we don't get that retracement there, then it just goes to show, how bullish we are on the FX pairs against dollar. Yeah, just look at that. EU is rallying up too now. Market maker buy model. We didn't come and tap into that 4 hour inverse. I would say no, not. I guess we did respect the fair value gap here. We just rallied. Yeah, we respected it perfectly. That's another market maker buy model here. Even though we did kind of close below in the 1 minute. Not really the 5 minute though. They respected it. Are you ever thought of long-term investing? I do a bit of both, but recently I've just been focused more on trading. It's like long-term investing, you gotta have capital too though. Not really, no. Like you can build your capital through long-term investing. You just have to be very patient. You have to hold, and you have to hold for a couple years if you really want to scale it up and wait for the return to come in. You have to wait a couple years. So I'd rather focus on short term and build that capital up, and then eventually start putting some of it into more of a long-term investment. And that's pretty much my game plan, using short term to build long term, because it's gonna take a while to build long term just from building long term. Okay, we might have a market maker buy model here. Looks clear here. See, we can tap into that premium weight consequent encroachment right here for NQ. So I'll probably take the trade on NQ rather than ES. So ES does look a lot weaker though, so it just Maybe this one. I think it's an advantage because I'm only 13. So, oh no, if you're that young, then yeah. If you're that young, then yeah, bro. Just long term, bro. You're gonna be like 18. You're gonna be set. You can do dividends. You can do whatever, man. Put your dividends to compound and reinvest themselves. You'll be set, bro. Especially holding like good stocks. Like let's go look at some stocks here. So everything's more. Meta was something Luke was calling out last year. Luke Belmar, man, he was calling that out. Meta. It's kind of in a rough time right now through the world. So, but this is the best time to buy when you're buying the dip. Honestly, you're buying the dip and you're holding. So it's kind of the best time, bro. Don't be scared. Be like Warren Buffett, bro. You gotta buy the dip and hold it. Be a Warren Buffett, bro. Warren Buffett did that shit, bro. Everybody was panicking. He was buying up everything. I swear. Maybe we come down to a discount. Let me tap the buy side rally. I want to see NQES though. I don't think you can have formed. So 4 hour. I don't think we have more of. I want to see how this holds. If we hold, I think we're gonna have higher prices. If we don't, make an inverse lower, then for sure. I'm gonna flip this real quick. Use standard deviations. So NQ is not even holding it. Yeah, it just looks lower prices are coming soon. Be waiting for that market structure shift. This is kind of the imbalance there. Already got. Looks like it's gonna rain through. I would use this right here, the mean threshold, to see. ES is respecting that fair value up though. You can just see ES is a lot weaker than NQ, especially on the weekly. If we hold, I want to see this balanced price range that is kind of being created. Okay, ran through and then tapped into and then rally higher. That's kind of what I'm just looking at. But if we can't, yeah, lower prices probably will be here again. I want to see if we are. Yeah, we are below midnight opening. So yeah, we are in a bearish environment below midnight. Anything above would be premium prices. So you can just see why. I would kind of, if we did take a long, probably hold to equilibrium of the range for sure. But no trades today for me, honestly. I own stake in PayPal because their ROIC and profit margins recently have been strong, but mostly because of their buy now, pay later acquisition. They have a huge MOAT, almost 40% of. See, I'm not really that familiar with stocks. I used to trade options, but not really like a long-term investment type guy. I mean, eventually I'll probably start doing my research, but as of right now, I don't know what any of that means. But I mean, from the company standpoint, though, it seems it is going well because of the buy now, pay later acquisition. MOAT is a competitive advantage. Digital payment is made through PayPal. So like crypto, I think we're just going to consolidate. Yeah. After right now, I think we are. Looks like a clear buy model though, but I don't think we're going to respect it because we are in a bearish environment. ES though looks like, yeah, no, it doesn't respect it either. I just don't even plan on taking a trade today. We're up on the account. I just want to preserve the capital. Low probable day today. If I was to take a trade, I'll probably de-risk myself, but I don't think we can take a trade. This was a good trade here. This is something I would have taken on a forex pair. It's just the forex pairs didn't look. I don't know. I guess I just didn't want to trade the forex pairs today. I think they were just not my type. It's very, very, very range bound market on the 1 minute. Still, don't get me wrong. You can still trade this, but to me, just on a probable day like today, it just wasn't probable. It wasn't highly probable. I want it to be highly probable. I know people would take this right here. Some inverse fair value gap. They're probably on Twitter right now. Dodgy's taking this right here. Target this low. He's out. Looked like a clear market maker somewhat on the 1 hour, but we just went lower. But it didn't want to run to that south side imbalance. I thought it was on the 4 hour looked like a clear model here. Clear market maker sell model. I do see us coming down, taking out these lows for sure. Probably next week. These two, you know, clear sell model, of course. So yeah, it's more of a sloppy range on ES or SPX, and Q looks a lot better. Are drawn liquidity always highs and lows? I mean, yeah, draws on liquidity, like liquidity, external and internal levels of liquidity can be. External levels are more like highs and lows. Internal are like fair value gaps. Anything inside, you know, like a high and low. Basically, fair value gap, breaker, mitigation block, order block, whatever, you know. That's pretty much internal and then external. So if you want to target external levels, you can target internal. So it doesn't matter, you know. Either way, price is gonna seek those levels internally or externally. You just have to follow your bias. So my bias here would be these external levels of liquidity down here, these lows. Internal levels though could be this order blocks, mean threshold, or probably this fair value gap internal again. You know, just taking profit at these areas, or this order block and internal. But then eventually the final terminus would probably have to be this external low, or this external low, I should say. So yeah, internal again, consequent encroachment of this kind of wick. This is the external level. This is internal. Don't add a thing there. Remember how I was talking to you about the mini market maker sell model yesterday, or on yesterday? I think it was yesterday. I would definitely recommend Everything Money YouTube channel. It's all about long-term investing. They're mostly invest in the way Warren Buffett does. I don't think we can copy Warren Buffett. Bro invested into like Geico, and he just his mentor did. He was investing into his Berkshire company. Yeah, I kind of remember. Yeah, this one over here, this market maker sell model. Or was it on the 1 hour? Was it on? Were you talking about it on the 1 hour, or was it on the? I think it was kind of on the hard time frame. Yeah, it looked clear on the hour to run high and then run lower in the morning. The hourly. This one up here. I need a date. Thursday, was it Thursday? Bottom. This one right here. Today, bottom today. Oh, right here. This one. You think we're just gonna run? Oh yeah, I see it. See the Sibi? Oh, this one right here. This is also in balance. You come up, you take that, and then you drop. That's what you were expecting. I can see it. Yeah, no, I see it. Let me go look up that channel, Everything Money, real quick. On YouTube real quick. Today? Yeah, no, today just not really probable, I guess. Everything Money. This one right here.
Welcome to our stock market investing.
This one right here. Damn, this guy's kind of popping. Stocks to buy, stock market for beginners. Yeah, this one. This stock is crashing.
One of the biggest technology companies in the world is down 10%. Just kidding, it's a car company. It's called Tesla. You see what I did there, Mo?
That was funny.
Everybody out there.
I don't want to get copyrighted, bro. I mean, I'll sub to them, I guess. I'll see what they're working with. I'm gonna watch later. Shit, they didn't want to do that, so I didn't take a trade. Yeah, nah. Today we just went lower, I guess. From like the higher time frame market maker model. Euro. I just want to see how these close today. That's all I'm really focused on. I'm not even really focused on the trade. I'm focused on how they close, because if how they close determines how we're gonna trade next week. So, especially for like the meat of the move, like the meat of the weekly candles, what I'm trying to catch from now on. I'm trying to be more of a short-term trader. Again, though, I'm looking at the economic calendar for next week, and it just seems to me that we're gonna just not gonna be able to do that, especially with the forex pairs. Let me show you real quick. So next week, Monday, we don't have news. Tuesday, October, we have GPP high impact news. And then we have Euro impact news, high impact news, flash PMI basically, and then German PMI after 3:30. So bro, it's like a crunch fest after this, man. News is gonna be like every hour, and then eventually 9:45 USD news. So I'll probably just wait till like 10, bro, 10 to take a trade here. Monday, October, even Monday. No, Monday's gonna play out perfectly. So the range is gonna be defined. Tuesday we're gonna be seeing where we're gonna be trading, and then Wednesday it's gonna be again just high impact news for Euro 4 a.m. 10 a.m. for CAD. So I'm gonna be watching USD CAD basically, and then 11 a.m. for CAD again. BOC, I think that's like the FOMC for them. So yeah, it's like the Bank of Canada, I think, or yeah, something like that. And then Thursday 8:15 Euro again. Just this is like late Euro news, I think. And then 8:30 advanced GDP unemployment claims. 8:45 Euro news again. ECB, Euro Central Bank, I think. And then let's go look what that is. What is ECB? See what it is. Euro Central Bank, I think. Yeah. Okay. So, and then 8:30 core PCI, PCE price index. So Friday again 10 a.m. news. I think this is like a typical Friday with news. And then daylight saving time shift. Oof, I'm about to change my watches and stuff from time to time. But yeah, no, Friday I would probably want to take a trade from Tuesday all the way to Thursday, especially after. For this one, CAD, I'm not going to trade. For all the other ones, probably after 10 o'clock. And then this one right here, probably just wait till 9:30 opening for this day right here, Thursday. This one, probably just take it a regular trade, even if it's before, on Forex, if it's like before 8, I'll take it. Before 9:30, I'll take it. So, this one though, I don't know. I'll kind of be more cautious. Probably after 10 o'clock, I'll start taking trades on Tuesday. So, yeah, it just looks crazy. Only thing I was told when I was in a hedge fund. The only thing I was told when I was in a hedge fund, it's not really about fundamentals because everyone already knows that info. You gotta find something that puts the company in a different position. Getting into bigger companies are the blue chips, so they often run higher because they're good companies. Blue chip stocks. I think that's what makes up. Let's go look at what makes up more majority of the S&P or Nasdaq. This is how I would invest. I would see the top 10 stocks, the ones that are moving the most. So Apple, Microsoft, Google, Amazon, Tesla, Meta, Nvidia, PepsiCo, and then Costco. So yeah, I'd probably just invest in those. Probably for like a long-term investment. But I'll try to catch the low with some technical or something. Some like higher time frame, monthly. Can't do that? Why not, man? I would just invest in those, bro. It's like the best. The best. Like, it's just guaranteed. Everybody's big money's in there, bro. I'll just join big money and just let them. I'll ride the wave with them. I'll let them. They'll be like the big wave, and I'll just be riding it, man. That's what I'll do if I was investing. Or maybe let's go look at the stocks. Maybe I don't know. I'll probably do some company research too. I would just see company research. I think there's some better stocks out there. I used to trade GME. That's what my portfolio manager never told me to do. Told me never to do. Well, I don't know if the big seven can beat the market because their fundamentals are looking sloppy. I don't know. I'd rather just day trade right now. I'd rather not focus on that. But I'd rather buy dips. If I was long-term trading or investing, I'll be waiting for like the market to crash and I'll start buying. I don't give a damn. I'll start just buying it every day, bro. I can invest some of it. Like buying the dip and just holding for like a couple of years. We're gonna be up eventually, you know. The market's gonna come back. If it crashes, bro. Like it crashed, bro. I'm a short-term and long-term, so it doesn't bother me as much. But if it did crash, bro, that would be unfortunate. I just lost all my long-term investments. But I made money along the way when it's crashing, so it was like a win-win, I guess. Well, I don't know if the big seven. Oh, yeah, I already read that. I think. The video got a PS ratio about 31.66. That's why hedge funds are half short, half long. But price is algorithmic, man. It's the algo. It's the algo moving the market. Stocks not necessarily. You think so? I feel like it looks more clean on stocks, especially on lower time frames like the 1 minute. It's very, very clean. I feel like price is just so clean on stocks. Like individual, not really. Individuals, yeah, no, probably not. Since like there could be some big buyers, but like on the big seven, there probably is some big buyers that just control it. That bought it all up. Let's see like the big stocks. They move clean. Not today. Not really today. This one right here. Just kind of clean. Kind of. No, let's look clean right here. Honestly. Target these lows right here. Right typical lows. Let's go see Euro. Euro's dropping right now. The 5 minute. Dropping. Big range right here that was created. Right there. 5 minute imbalance. We're gonna see if we can rally higher. So I'm gonna be watching. It kind of does depend heavily on fundamentals. When going into long term investing, I would definitely recommend not looking at the analyst option because they don't even beat the market 90% of the time. Yeah. They don't beat the market 90% of the time. That's crazy. That is kind of crazy. Better than your own share. I called Shopify's dip when I was in a hedge fund. You were in a hedge fund? That's crazy. We are rallying. Seems like that buy side on the 5 minute was getting respected here. Look at Spotify in July. Oh, you got it on here. July was right here. So right here, the dip, biggies, the biggie dip. Right here, 40. Big volume imbalances on these. It's kind of crazy. AXP American Express is at a discount right now. Not gonna lie, they beat the EPS and still fell 4% today. I'll have 5-year ROIC at about 10%. That's about normal. PE FCF is at 7 and 14. That's what the earnings do. Free cash flow higher. The income that's in green. What is it at AXP? Damn, I used to have a bunch of stocks. I remember I used to have a bunch of stocks on the red folder, but I changed it. Deep discount, right? It's there. It's here. The discount is here, brother. When is the next earnings? That was what? It was good, but stock went down. Stock market. This is stock market right here. Right, stock market. Oh, it went down today. Damn. Yeah, it is kind of a more of a deep discount. Just pump lower. Let me go look at Euro though. I need to look at Euro. So we are rallying, so. I just need to see Euro. I need to see Euro and you see the indices are still dropping a bit, yeah. We're just gonna watch Euro. Tape reading today. Today's like an actual day we tape read. Yesterday we didn't really tape read. Yesterday we were just trading. Yes, then the day before that we were trading. You know, we're up on the funded. Feels really good being up now, you know. Let me show you real quick. Being up on the funded account, it feels like I feel like I'm juiced out, bruh. I feel juiced out, ladies and gentlemen. I don't understand. There. I feel juiced out. I feel so juiced out, man. Look at that. We're juiced out. Stop. I need to fix this right here. I feel juiced out, bro. That's all. That's all it is. It's a slight 1%, you know. It's not even. I don't know why I feel juiced out. It shouldn't even be juiced out. Let's see. Your profit margin 13.1%, 5-year 14.7, also great. They have bought back 14% cheap. You got it, man. Thank you, brother. Thank you. I'm trying to be more consistent here on these type of days. Where like I don't know, I feel like that's something too I need to meditate upon is basically like how to identify when to stay out the market. Like having your emotions intact and not feeling the urge. Some days I do feel like the urge to trade. Like this, I felt the urge. I felt the urge earlier. Take some shorts with the market maker sell model. And then some longs too, of course, you know, just I'm curious, I guess, but I don't know. I just need to stop that. I need to stop feeling the urge to trade. Just like if you're curious, watch the price action and see how it pans out, bro. Stop focusing on trading. Focus on the price action and that's it. And if the trade is there, just take it. You know, identify high probability days and just staying disciplined, you know, to your game plan. That's something I'm working on. FOMO, yeah, fear of missing out. Yeah, some days I do get that. I don't know, just because I'm greedy. I want money, and I guess that's not right. That's not right. Focus on the price action, not the money aspect, because then the money will come. If you focus on the price action, you stick to your game plan and your model, and you take it, and you execute. You be patient and disciplined. You win. At the end of the day, if you can do that over a long period of time, you will be consistently profitable, and that is the objective, to be consistently profitable. Can y'all see my... Okay, yeah, hold on. I thought OBS was screwed. Bro, going for sleep? Can relate? Nah, we reached the volume imbalance. We reached the volume imbalance already. I'm just playing. Sell model right there. Sell model right here. This one looked better. Looked a lot better. Right here would be the low. It's perfect sell model. Bro, I'm gonna trade the market maker X model from now on, bro. I'm not trading anything else. Even if it's like a 1 minute market maker model, I'm trading it, especially with higher time frame premise behind reasoning behind this trade, you know. I'm taking this shit. Taking it. I don't care, bro. I have to. My strategy is basically SMT plus ICT Suns model plus OTE plus market structure shift. Damn, that's kind of a lot of models. So the 30-second model is Sun, and then SMT, that's understandable. And then OTE, optimal trade entry, with a market structure shift. That is a lot. My models really just... I'm trying to focus more on market maker X model. So the market maker buy model, sell model. And then eventually the 22 model, of course. So a fair value gap. And then, of course, with displacement with a market structure shift. And then re-entering that fair value gap. Some days I use like a dealing range from like premium to discount, of course. I try to use OTE, but you know, I'd rather prefer the dealing range, and then SMT sometimes if it's there, and then power 3 sometimes, you know, AMD. But yeah, that's pretty much it. Did you take the afternoon trade though? Yeah, I took that. That basically put me at a drawdown for the funded account right here. I was thinking about holding to the previous day low. Previous week low. It was like, man, it's just bound to reach there. But then I took my profit here at this low. Let me show you the trade journal, I guess. It was a really good trade. I only risked like 0.5%, made like 4, or no, 3.5, I think. It just put me at a drawdown right there. And then with the euro trade, it was even more. It was 2.5. We gained 2.5% there. I use the market maker X to answer whatever PD array I want. Yeah, forget higher time frame PD arrays. Also trying to take trades based on power 3. Power 3 more for me is like more of an indication, I guess you can say. It's like what price is really wanting to do, like where I should be trading. But like more of that is more like a top down, I guess. Top down really helps to like identify where I want to be trading, which direction I mean. But yeah, no, this is a trade. 1 minute. We took a partial at the equilibrium and then we held to the final terminus. I got off the charts. I went to go do some chores and I went to the bank and Walmart and all that, and then some other places. But I didn't even look at the charts. I set an alert. I got the alert and it was hitting that premium discounted weight consequent encroachment. Took a partial at the equilibrium though during the stream, and then eventually I was like, alright, stream, I'm leaving. It was around here. We started chopping and I let it run. And then the 5 minute rejection block, clear market maker style model. But the 1 minute, you can just see it. We had market structure shift. We had a close below. We got that closure. Fair value up created with an inverse. We tapped into it, respected it. I entered. We started dropping. Stop loss was above this high. I would have had it around here, but I wanted my trade to have room to breathe, because again, that sell side imbalance is like having disc. ICT talked about this. He's like having defense. You want to have defenses like for your stop loss. So this was defense 1. This was a defense 2, and then this was my last defense. And if we got hit, we got hit. It was in the consequent encroachment. So, now yeah, and that's pretty much it. You know, the 5 minute rejection block. We respected the consequent encroachment of this. We never closed. We just dropped. 15 minutes inverse. I was kind of scared about this, I guess you can say, but it got ran through again because of we swept buy side, and then we respected the consequent encroachment of this too. So the bodies tell the story. Wicks do the damage. 1 hour, we were hitting an order block on the 1 hour, and again, it would have been more ideal shorting near equilibrium, but again, I wasn't able to identify that. And then eventually the 4 hour, we had an inverse on the daily 4 hour order block here, or I guess it could be a breaker. You can say it was a breaker. Breaker got tapped into and we dropped, so perfect price delivery. Yes sir. Yeah man, made 2.5%. We got a drawdown. That was a trade. Now, you know, I'm just trying to be more cautious, more lenient. Trying to review that, see what I could have done better every day. Also trying to take trades based off power 3 consolidation, maybe reconcile manipulation distribution rate. So yeah, that's power 3. Power 3 is accumulation, basically like the consolidation, then the manipulation above the consolidation, or it could be below it depends on if you're bullish or bearish. And then the distribution phase, you go far. So yeah, and this right here is kind of power 3 on the monthly candle, but I'm just seeing like the open, high, low, and close. Seeing where we create the low, where we create the high, and where we open and where we close for the power 3 on the monthly. Because I need to see how this monthly candle is forming with the weekly candle, so weekly power 3 too. So like it's 2 higher time frame power 3s, very, very powerful, bro, because you just already know which direction you're going in. And I already had that weekly bias. Like I said, we couldn't hold above the premium wick, consequent encroachment. So I was expecting lower prices to the previous week low. We swept that. Now we're hitting the premium wick, consequent encroachment on the monthly in Q. So I will be aiming for the previous month low if we continue to drop again, because the monthly time frame, we are getting near that previous month low. And I guess I want to see us come below and close for more of a bearish prices to the discount with these order blocks here. So yeah, just using that top down, man, is very important. All this intraday movement doesn't matter, bro. You can catch intraday movement, but having this higher time frame right by your side, you know what you're looking for and why. So this might be a buy model here. So yeah, pretty much might be a buy, but I'm not going to take trades today because it's more low conditions. Have you subscribed to real-time market data? Bro, for CFDs, you don't need that. CFDs here, like CFD charts, you don't need that. Only for futures. If you like trading futures, you need real-time market data. But for CFD, you really don't need it. The charts are real-time, but they're more laggy. I had ES 1 hour breaker marked out. It was clean and obvious. Maybe some mohawks, but with market maker X model sell, I got somehow chopped up at the open again, ignoring the 22 model dumb. So with the market maker X model, I just found that, you know, the 22 model is probably the best to trade it with. especially if an entry confirmation is there, especially on the lower time frames. You're gonna want to use that for the 2022 model. Even ignore nice consolidation expansion. You gotta journal that and like review it and like go over it and like see what you can do, what you can improve on, meditate upon that. Have a great weekend, Brody. Stay safe. All right, man. You too, brother. Take it easy. All right. Enjoy this weekend. I'm gonna go watch the UFC. I'm gonna review the trades, review the charts, the charting, and I don't know if I want to backtest this week. I might not. I might read and then do some other business stuff. But nah, just like if you journal your trades and review, like I journaled yesterday. I reviewed it. I saw what I could have done better. Yeah, just fix that, man. Just fix it. And going into the next day, I was close to taking a trade today, but luckily my money hasn't been transferred, so I couldn't. I would have been stopped out. Yeah, nah, man. Sometimes it's just better not to take a trade at all. Especially on Fridays and Mondays, I don't like trading too much, like having too much risk on the table. Those days I like seeing how the market panned out, and then eventually TGIF too today. We weren't able to respect the TGIF, so I think we can draw it now. I think TGIF here probably come back with this low created. Nah, it doesn't look probable, man. If we come up, I don't know. It doesn't look probable to me. I feel like we're just gonna come up to like half of the range here on this big range. But for TGIF to be met, I just don't see it. What would be the equilibrium of this low? Let's put it across there. So right here. So TGIF wouldn't be met. So, yeah. Just one of those days, where you don't want to be putting too much risk. Just down the risk on Monday and Friday. But if the trading conditions are there, if it's like highly probable, I think you should just stick to your normal risk management. Take it. If you lose, you lose. Accepting the risk, just letting the market do its thing and not moving your stop loss too tight or not cutting at break even if you don't see the trade going in your direction. Those are problems I used to have. I've been really just trying to fix them, trying to fix them. And I have been, honestly, been improving on those. Not moving my stop loss too tight. I leave it. If I have like a good defense area where I know price is not going to go to my initial entry, I usually move my stop loss to break even and I just let it be there. Because if it comes back and hits my stop loss at break even, trade idea most likely wasn't validated, wasn't validated and wasn't valid. But it's one of those things where you can re-enter. Like on one trade on NQ Wednesday, I believe, we got chopped up. I re-entered. I won, and that was pretty much a loser right here. You can see we got chopped up. We lost. Our initial entry was for shorts on 10/18, basically 2 days ago, Wednesday, and then eventually I can show you a re-entry. So, it's never too bad to enter again. If you have an initial reason, enter, and yeah, that's pretty much it, man. Don't be scared. Review the trade. The one before I reviewed it, I looked at it. I was like, all right, goes around here, right around here. We got stopped out. I waited for more time to come by. Another during the silver bullet, saw us take this buy side on the 1 hour. I was like, you know what? This looks like a really good trade idea. And we had an SMT, very turtle soup. SMT. We were inside of a premium. I was like, wait, hold on. This is like a good trade. I reviewed from the previous one and I saw my mistake and I took it. Surprised you don't have more subs. It's not about the subs, man. It's about just showing the people what they want. How do you think we reach TGIF in the PM session? Do you think? Do I think we're gonna reach TGIF on the PM? I think we'll go up. I don't think we'll reach it. I think, like I said, 50% of this, but TGIF is kind of more of a deeper than that. It's like up here. If we do reach it, I don't know. I feel like we can, but it's highly unlikely because this right here is a breaker. It's a breaker here. You can see it formed on the 1 minute. Basically, this high got taken out, dropped. This breaker is gonna act as resistance because it's in a premium too. So I don't know. I feel like it's gonna be more hard to get up there, I should say. Plus we're bearish on the monthly and the weekly. So we're just aiming for that sell side down here, you know. If we do come up, I feel like we're not going to go up there to the TGIF area. I feel like we're just going to come up here to the premium. So I do expect higher prices like a retracement, but not to the TGIF level. Probably falling short to it and then dropping. Does anyone live stream? Does anyone live stream trading ICT? I can't find them. Patrick Whelan is one. The few profitable guys. He's not ICT based. I mean, if you go on Twitter, I think I don't think they really live stream. There's not too many people. I think they have more of like a paid mentorship. You have to join that. It's almost like unspoken ICT model is the sell mentorships. No kidding. I see how well it works. Someone believes me. Nobody seems to be openly profitable that I found. At least at live streams. Doesn't matter if you have the lay data, right? For futures, I think it does. For the CFDs though, like if you go to Forex or indices here, like CFDs, it doesn't matter. You can just enter off of. You can use any single one of them. Like Oanda, same price action chart. This one is different though. You see it's delayed 10 minutes. So I'd rather just go to the CFDs, basically indices instead of futures. So yeah, that's pretty much it. But those are like not as good as the futures. Futures charts are just better. But for like people that are streaming, that aren't profitable, I guess, or some mentorships, I don't know. I feel like if you have credibility to your name, I don't see why not. You know, if you're profitable, you've been doing it for a while, you have a track record, I think you can sell that to your people. But if if you're not like, answering questions for your community, if you aren't doing too much, then of course I see why. It isn't likely that they're gonna stay in there. I feel like you need to put in more work. You need to teach them. You need to show them why you trade the way you trade, and show them like live market executions, or trade with them live, and like bring them confidence, to the models you're trading. So that's all that really matters, But for live streaming, the reason I'm live streaming right now is just to build up more screen time. I realize that whenever I live stream, I usually focus more on the charts, and I'm indulged in that. And I don't, if I'm not live streaming, if I'm not like glued to the screen, usually, I'm just wandering off. I'm on my phone, or I'm not really paying attention to the price action charts, or I get distracted here and there. I go watch some YouTube, I go eat, I go do something else, And when I live stream, I really focus on the charts, and I just focus on the stream, I guess, Even if I have no viewers, even if I have like a couple of viewers, it doesn't really bother me, I try to focus and build screen time and see why price is doing what it's doing. That's really it. There's no, for the views or for the subscribers or none of that. It's really just for building more screen time and being able to just have more screen time, that experience watching the price action chart. Because if I don't, then of course I'm not going to be profitable, It's building that experience up, building that resilience, being able to identify why price is doing what it's doing, especially on any time frame, any day, any season. But yeah, no, whenever I don't live stream, I just don't give it 100%. And I think I need to work on that. That's something I need to meditate upon. And eventually, if I do stop streaming, I'm going to have to challenge myself doing that, watching price action like this without talking to anybody, just being quiet, listening to music, talking to the Discord, texting the Discord. I have just started trading futures, and I have enough money to pay for the monthly subscription, but I just don't want to pay it, If you have a funded account, I think it's worth paying for it. If you don't want to pay for it, you don't have to, you can use CFD charts. If you aren't, trading with live money, I guess, it's not worth paying for it. Hey man, never stop live streaming. Just gotta trust it. Yeah, no man, I'm not gonna stop live streaming. Probably, I don't know when I'll stop live streaming. I don't know. Probably whenever I'm profitable, I guess, or probably whenever I make it, I guess. It'll probably be a while. Even then, I'll probably still be wanting to live stream. It's just something I enjoy. Something I enjoy doing. You have a Discord group? Yeah, I have a Discord. It's not really too popular. Haven't been texting inside of it recently because I've been more streaming. Today someone joined as me. Bro, someone joined as me today. That was so funny. I was like, what? No way. It's like, no way someone joined as me, bro. That had me shook. Really, 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 really shook. Because I was like, no way. Bro probably has like a videos. He probably has videos of me. There's probably channels of me up right now. But now I was marking on my charting yesterday too. I usually put my charting from like the day before and I showed the Discord. Where can I join? I think it's in the description. But I mark out my charting basically and I show what I want. So yeah, also we have a breaker. We tapped into it earlier this week. We also did create another one, so I'll be seeing if we can reach up into it. Basically for the hour, like yeah, basically the Sibi. It's above the Sibi. What Busta was talking about. I was kind of looking up for us to retrace and then drop. We didn't get that. We just dropped today. So and then GU of course. So GU, if we hold this weekly buy side imbalance, then the Sibi or the previous week consequent encroachment of the previous week is my objective. So if we held the buy side imbalance, my objective would be this sell side imbalance with the premium weight consequent encroachment of this right here, the midway of this wick on the weekly. And then if we do close below, I'll manage to stay below the previous week low. Then I'll be watching to see that buy side imbalance. This one right here turn into an inverse, so use it for lower prices to come. So yeah, that's all I was looking for. Let's see if we are holding. So looks like we are holding it. We did come below it, but then eventually we did respect it and we are rallying up. I do see us probably taking out some form of liquidity, probably this rejection block, or maybe the midway point of this consequent encroachment, or this previous day high. Or yeah, that's pretty much it. Euro, again, Euro too. Euro's been more of a sloppy one since it is a stronger one. And it already met its objective. In Q, we dropped. I don't see us taking a trade here. Even if it's a buy, I don't see us taking a trade. This isn't probable. It's a clear market maker buy model, but it's low probable when you're going against a trend. Not hating on ICT or anything, man, believe me, but I don't see many people with receipts. Doesn't make sense. Everybody's charging low, which is suspicious. Someone can consistently trade with. Yeah, I guess they want money extra money on the side, but someone I would recommend probably has to be. Oh, let me stop doing that. Someone see someone's trading already. Someone's live streaming. ICT concepts, classroom streaming, live price action. That's K, I think. Market maker X model though, or OTE trader. These are very good traders, man. People that trade are profitable, and I watch some days I don't. Some days I don't watch traders. Ricky Gutierrez, I watch him for the market insights. Let's go. Let's see market maker X model. Market maker X model is probably one of the best. The MMX trader, one of the best, bro. One of the best. He's profitable, showing you. I think he's gonna come up real soon. He's already has 10K, bro. 2 videos, crazy. 50, 22. Like, by far, you should definitely be watching this. So yeah, that's pretty much it. Take this off right here. That weekly candle, that monthly candle, just juiced up right there. Now yeah, the OTE trader, market maker X model, ICT concepts kit, these all TT trades, yeah, bro. These people are profitable, man. Very good traders. They still charge, but the free stuff is good enough in my opinion. They show you how they pass funded accounts and what trades they took to pass that funded account, and their courses. They sell them. Good traders. Tyler Trades seems good too. Yeah, Tyler Trades, TJR. You can watch all these people, I guess. I don't try to watch too much, but if if I have to consume more, then I will. Have you ever thought about drop shipping? I do think about it some days. I used to drop ship. I wasn't in it long enough, I guess, to determine the results that I wanted or see the results that I wanted. More like trading too, I quit drop shipping a little too early. Trading, I stuck with it for a little bit longer than drop shipping, so I might have to get back into it soon. Or probably just making an agency and social media agency and just start doing that. Some things I want to do, And these are the fun things, but I'll be RB, man. Use the Yes, boys, I'm back. All right. All right, let's see. I gotta see at this point. What to the music? Hold on. Okay, yeah. Let's see the music real quick. Let's see. I gotta see at this point, though, it's killing me because I can see how awesome the 2022 and the 2016 material is, but it's like an F1 car or a fighter jet. Doesn't mean you can get off the ground, though. My brother drop ships just by reading the manual, right? No. It's gonna take time, bro. It's gonna probably take. It all depends on how much work you put in, really. You know, my charting, my journaling, all that was wrong. I was doing it all wrong, and I didn't learn until recently. You know, and that's when I started seeing improvement. Right now, just putting in more work. I still review the material. I don't watch the 23 mentorship as much anymore. I'm not as caught up with it. I still got like a couple, like 20 videos to watch if I want to catch up, but I don't try to watch it too much. I really just try to focus on my own trading and just try to, because I already consume so much of the material. It's really just putting in the experience now. But I started trading because I didn't really want to get a job, not gonna lie. Yeah, no, that's a lot of people's reason for trading. You're still young though, man, so you know, it's, you still got time to learn about trading, develop your intuition about the market, and eventually, you know, just trading different styles. You know, you can long-term invest like you're doing. You can short-term invest, get really good at that, then build the long-term investing. Or you can just hop into crypto and flip your money, you know. There's multiple ways to trade, multiple markets to trade. You know, it's all pretty unique in its own way, how they move. So let's see. We're still in 11. This New York minute open, man. I should have seen this. I already did see it. I saw it earlier, but I didn't really expect much. I thought we were gonna go up deeper. This midnight opening is very powerful. You can just see there. Couldn't stay above it too long, and we just dropped with a market maker sell model there. That would have been, I would classify it as a B plus setup. It's a B plus. A C plus was a euro trade I took yesterday. That was like a C minus actually. A C plus would probably have to be like two confluences with no time element. So yeah. I feel like ICT recent lives, it's all about his Twitter space, not about his trading. I haven't really watched it, but yeah, no, he did live stream for a while. Like he live streamed like straight for a week, bro, and I was like, all right, yeah. I don't know if I really want to watch this, man. This is crazy. It's crazy, bro. Just watching the tape. I'd rather watch the tape myself than just watch somebody else watch tape. But you can learn a lot too, you know, from him watching the tape and like why and where he's looking at levels. But majority of the time he's looking at like the 1 minute chart, and you know, he's watching price on the 1 minute. And so if you really want to get good at the 1 minute, you can just watch the 1 minute. And yeah, no, I think he does scale back up to like the 5 and 15, has his higher time frame levels, he tells you about them. But yeah, that's pretty much it, you know. He shows you how to read price the way he does. What days to get out the market, what days to be in the market. But you know, it's better if you just put in the work. If you're still learning though, you can learn by all means. Watch his 23. But if you already have some of the material from like 2016, 2022, I feel like that's enough to work off of. Just the 23 is more about inverse, then inversion fair value gap. What else? The Reaper, the time elements like the new week opening gap, new day opening gap. I think that's pretty much it. That's all he added to the 23. All I found, the Medusa model, the silver bullets, 10 to 11, 2 to 3, the London 1 2, of course. So yeah, no. I mean, you could. There's still a lot to learn in the 23 mentorship if you're watching it, or if you haven't watched it at all. There's a lot of concepts you can learn in there, but yeah, that's pretty much it. You know, the 22 and the 2016 is good, but 2023 is like more of like a cherry on top after the whipped cream has already been put on, and then 2016 is like the milkshake. You know, still fun though. Yeah, for sure, bro. It's fun. It's fun watching it, seeing him talk and just like talk about different things. I started watching TGR and then moved over to TT trades, and now sometimes I watch ICT and TT trades, but mostly trying to backtest and read like price actions. Yeah, no, that's the way. After you have like a good understanding of a model or like a concept that you want to trade, backtesting and watching price action live and developing your skills with that model is probably one of the best things. Because you're going to get so good at trading with that model. If you just put in work with it, you're going to see the results that you want to see. Of course, you got to have good risk management. You got to be able to identify high probability days from low probability and use time elements like New York session opening, silver bullets, macros, whatever, power 3. Just developing your skills, though, is very important if you want to get really good. Just trade one model, but with multiple time frames. You'll see. Always looking for that Cameron model, but on all time frames, it's like it's not there. Yesterday, but was on the 4-hour breaker with a big manipulation in the middle, but it was there. I really love real estate, but you just gotta have all that money to get started. Yeah, especially with the housing market right now. I was looking into it. The housing markets right now aren't the best, because of inflation and how they're inflated with the mortgage rates and all that. But I would probably wait. The breaker seems to be the boss to me, man. They generate a lot of fair value ups a lot. So like the breaker with the fair value gap is a unicorn. That's very high probable. So this right here, this breaker, you would probably find a fair value gap right here somewhere. Take that short. That's high probability. Or you can use like a rejection block or the order block. I guess you can use that as your confluence. Enter, stop above. Probably this high. Or you can probably break it down even further. You can find a fair value gap in there. Probably this fair value gap here. Respected. Yeah, barely tapped into it, I guess. You can use this order block. Or this inverse here. This inverse probably looked really good. Stop above the high. Right here. That would have been a good trade. Just using all these confluences to align the trade ideas. Very important. Right now we're bearish on the E-mini and E-mini S&P 500 / NASDAQ. Yeah. OTE is the Mac Daddy, but it's hard to tell when it's going to run external or reject at the OTE level, right? Really low probability for now. Not for us. Reach to the TGIF, yeah. But for OTE, reaching external, for OTE, I kind of like using standard deviations if we are near. I would use like the 0.27 level or like the 0.5 take profit areas. Because if you enter like at a OTE level like right here, make this a little bit bigger so you can see. So if you enter like at an OTE level right here, like the 62 retracement level, your stop is right here. If you go to like the 0, that's basically guaranteed like a near 1-to-1. But if you go like the right 0.27 less 1-to-2, 0.5 and 1-to-3. So if we are near like an external level, like on a lower time from like the 1 minute, and like it's not near a 5-minute low, I would just use those levels, those standard deviation levels. Do you use lower quadrant? Yeah, no, I do use them. Especially like on higher time frame fair value gaps, I use quadrants. This is my main Fibonacci I use. You'll always see me using this no matter what. It's just, I think quadrants are very, very, very powerful. That's something that's not talked about enough in his videos with ICT. I mean, he talks about them at like in a couple videos, but not enough. He needs to like state that quadrants are probably, you can see a tap near the 0.25 and then it drops. Like these are very important levels, especially on higher time from like the monthly. I was talking about it on the monthly on, I think, dollar. I think it tapped the 25. Yeah, it was tapping the 25. It's rejecting it. If we don't want to come to the consequent encroachment, I see why. It's a very high. It's a monthly candle. It's a monthly SIBI, bro. Like the quadrants are gonna play a part in this. Quadrants are very important. Yeah, nah, we're not coming to TGIF, man. It just doesn't look like we're gonna go up there. Looks like we're just coming down. Right, AB equals CD is just 100% of the original leg. Very good. Or you can use the 2.5, standard deviation areas. Starting out, just trade demo. Please believe it's much harder than people think. So right here, the standard deviation area. B take profit areas if you were to short around here. On the OTE level right there. The 1 minute OTE right there. We had a market structure shift. Enter. Standard deviation areas. Let's see. You exit right here. As soon as it comes back to the inverse or the 0.5. I traded demo for about 3 months. For me, I really traded demo. I think for like 3 months too. It was from January to like March. Yeah, from January to March. February I did start a fair funded account, but I failed it, so I went back to demo. March I started up a demo, and then I bought some funded accounts, but I didn't trade them until like I was like finished with, I think, the 2016 mentorship. I was watching it around here, and then April I started up those challenges, and then May too I started up those challenges, and then I was already watching the 23 mentorship while trading those challenges, and then I failed. And then I actually started watching them. I started just buying more funded accounts, and then that led up to today. I haven't traded demo since then, so it's been like 3 months demo trading. And then that's pretty much it. On breakers, I've seen a ton of them run 2 deviations or just shy. Even if we only look for 1 deviation, it's usually a big win. Standard deviations with manipulation areas like a breaker or just taking out a high is very, very, very powerful. Like this right here would be a good standard deviation area. 2.5 to the level. We reached that after taking out some form of buy side liquidity. That was the manipulation area. Then we started reacting lower. Eventually, you want that closure though to confirm. And then you can see we came back up, tapped the 1 area, basically the breaker area. We dropped. Boom. Perfect. Good trade idea. And just letting the profits run. Today, if I would have held that trade from yesterday, I think it would have been up like around, I don't know how much actually, because we did take a partial around here, like equilibrium. But I think I would have been up around like a good, probably, if I had to guess, probably around like 7%, 6%. Live in Denmark, we have the highest taxes in the world, 50%, 60% based on your income. So if I start actually earn serious amount of money, it's probably gonna move or some. What do you think? Yeah, probably just move to Dubai. What are your taxes in your country? The USA. I'm about to look that up actually. I think it's like anywhere from 10 to 12. 10 to 20. Look it up real quick. There's only federal income, no state income tax in Texas. So let's go look. So yeah, it depends, I guess. US currently has several federal tax brackets, which rates from 10, 12, 22, 24, 32, 35, 37. If you're one lucky few to earn enough to fall in the 37 bracket, it doesn't mean that the entirety of your taxable income will be subject to 37%. So if you won't have that 30% rate, you'll probably have it a little bit lower if you earn that much. If you have like a LLC or an S corp, you just have tax write-offs. I think Tom H is from Denmark and has a residence in Dubai to work around. Yeah, having that residence or like a business that's in Dubai, 0 tax. Or you can, where for me personally, I would probably go to Puerto Rico since it's so close to Texas, or the USA. I would probably get their income tax benefits, and you get 0 tax. Stay there for 6 months, basically. That's what's the requirement. As officer, yeah. If you're a resident or citizen there, you can reside there. You can come back to the other countries. I think Dubai is better though, because if you get that citizenship there and you like put your businesses and your income there, you can just travel anytime you want. You can just stay there for 1 day. You don't even have to live there, I bet. You can just go there for maybe like a couple days and then leave. Like Dubai is probably the best one, but for Puerto Rico, you have to stay there for 6 months for it to have the tax benefits. So that's kind of the one thing. But Dubai is very, very expensive. It's probably one of the best though, One of the best countries. Cars are hella cheap in Dubai. You think so? Yeah, that's what Dubai is. They're nowhere low. By Saudi. It's by the Saudis, bro. TGI, nah, man, no TGI up today. But we really tried to do that. Already too deep into the volume and bounce on the weekly. I would expect a retracement probably to this level, but it's not. It already got ran through that low. Probably after lunch, we'll probably have this reversal. That's kind of what I'm seeing, like 12 to 13. But if not, if we don't, then yeah. Denmark, you gotta pay 150% extra. Damn, for just to buy a car. When you buy a car, that's a lot, bro. They're taxing you too much in Denmark. Denmark's by Sweden. Let me look at the map. Denmark is Denmark. This is where Holland's from. This is where Erling Haaland is from. Is Erling Haaland from? Erling Haaland. I think that's where he's from. Denmark. He's from Denmark, right? No, he's Norwegian. Damn it.
You didn't know that?
No, I thought he was from Denmark.
Who?
Erling Haaland.
Heck no.
He's from Norway. I'm mixing them up then, because the flag looks the same. Look at this right here. Look at Denmark.
Just make another tab. Compare it side by side.
Yeah, you're right. Look at that. Oh no, yeah, you can see the difference. This one has blue. This one's white.
Yeah, it's like blue, white, and yellow, and that's like just like red and white.
Oh, this one's by Germany. Oh no, looks like yeah, no.
Where's Denmark by? Like Norway, Sweden.
So okay, no, yeah.
United Kingdom, Germany.
United Kingdom, Netherlands, Belgium, Germany, the Czech Republic, Poland, Denmark. Denmark's like the outskirts. By Sweden, Norway.
I heard Sweden is very, very pretty. United Kingdom is like the UK, right?
Yeah, like Ireland.
No, but like in the UK, just like it's like Manchester and stuff like that, right?
This is England. The UK is England.
Yeah, I know.
Mixed
like
with other.
Manchester has like Manchester and it has like all what's the other one called?
Manchester, London.
Yeah, London have London.
Yeah.
London's popping.
London. They have Luton, Chelsea.
Are you recording yourself?
I'm streaming. But not yeah.
Streaming.
I'm streaming. On my CFD D1 ES chart, we're tagging up the top edge of an order block now. On your chart. For what time frame? If you had to say. People use... Alright, so the thing about order blocks for me is this. I think some people could classify this as an order block. Like this would be an order block here. For me, I use the order blocks where like there's a change in the state of delivery. I think those are the most powerful. Like this right here. This is an up close candle. And then eventually close below it. That is a change in the state of delivery. This would be my order block. This wouldn't be my order block. This would be it. You can see, came up, tapped into it, and we dropped. I think those are more high probability order blocks for me. Like this right here again. These two right here. We go up, we come close below it, tap into it, and then we drop. That is like the high probability order blocks for me. You need like a change in the state of delivery. That's where two up close, we drop, close below the opening candle of the second one. Tap, drop. That is more of like a high probability order block for me. I don't know. I don't know. I just prefer those over the original ones. Like this right here. I prefer these right here. So we are having that market maker buy model come in, ladies and gentlemen, here. Maybe we have that buy model. Maybe we have this market structure shift here. Eventually, of course, we need confirmation. And then this inverse was a change in the state of delivery. Here you can see we respected it. I wouldn't mind if we come down eventually, and tap up, close above, and then we start targeting some areas of buy side. I would eventually measure the range, of course, from this high to this low, and I'll see equilibrium. I'll take a partial there if I was, or maybe take partial scale out at the highs, of course. But I would probably take one of the partials at equilibrium for sure, and then letting the other one run probably to up here, seeing this range here, low probability order blocks is where you have a small body and two large wicks. I don't know how to describe it. Doji candle, yeah, so a doji candle is pretty much like this. A doji candle is like this right here. We had a doji candle, I forgot which one it was. I think it was on dollar. But then doji candles are like pretty much small bodies, big wicks. So I think that's what he's talking about. But yeah, doji candles with the order blocks are not the best, honestly. You need like meaty volume order blocks, like big bodies. Big body order blocks are probably the best. And then if they have small tiny wicks, then of course that makes it even better. Just use the opening price. You can use the body, the wick, but I just prefer use the opening. It's more of a taggy. So we have your market structure shift, no breakup structure here. It's a market structure shift. Wick is an order block on lower time frame too. No, isn't it? Yeah, it is. I just prefer the opening, even on the lower time frames. I don't know. I just don't like the wicks. If a wick is huge like this one, I would just measure it with the consequent encroachment, or they're called quadrants. Tried in 10. New York silver bullet sees took a loss 0.5 for TGIF. No, yeah, TGIF wasn't there, man, for silver bullet, especially here. You just gotta zoom out sometimes. You gotta see where prices really wanting to go. Seeing the market maker buy models, sell models form. Especially on the 4 hour, I was looking at, I think it was daily. Yeah, daily. Looking to see if we can come and tap the consequent encroachment of this. It seems like we have actually. I'm gonna mark it out real quick. For NQ, we already tapped it, but for SPX, we haven't. So I'm gonna mark this out. Maybe this is where the trade starts to reverse for the day, or the market starts to reverse here, and then we just start to rally. So this is a very high probable level, and then of course the sell side up here, down there. To reach. This would probably be the best idea, but we're about to hit lunchtime, so I would kind of wait for PM session. PM session yesterday did offer a good trade. And I feel like PM session is likely to retrace because New York AM continuation, lunch consolidation, and PM reversal. Like a profile. Let's go look at the profiles. Let's go right here. When you think bullish on Euro USD and bearish on dollar, macro is a killer. Macro 1150 1010. 1210. You think we're gonna hit that macro and just start pumping? Let's go to your profiles. But for Euro going up, I think it's gonna be soon. I just gotta, we can't be bearish forever, I just see us going up soon. I'm trying to find where it's at. T sessions right here. So today we're having lunch. So it's gonna be either one of these right here. Be this one right here. So we're gonna rally down, consolidate, and lose and rally lower for the last hour. But I don't see that happening. I see us at least having this one right here. We come down, start consolidating, we drop lower, and then we rally higher, and then eventually we start dropping lower after that. So it's kind of my initial thought for the New York one. Gotta go have a good week. All right, man. You take it easy, H trader. Enjoy your weekend, man. The macros. This would be a macro right here. As soon as this market starts to hit this right here, 1210, 1150, 1210. That's a macro. Let's put this somewhere right here where we can see it. So tap the fair value gap. We have a small one right here. Premium. Consequent encroachment. This kind of wick, respected by this body. We open up. We go higher. I want to see this order block be formed. We need to close above it, of course. This down close candle, use it as a means to push price higher after. And yeah, that's kind of what I'm seeing right now. ES rejection block on the hour 4, tagged 50 level, but my CFD chart is different from futures. Yeah, the CFD charts will be different than the futures. I guess if you're trading forex, stick with the CFDs, but if you're trading futures, stick with the futures ones. Simple, sweet digestion. I'm gonna be watching though. If we can rally, continuing to rally, first target, second target, third target, and then equilibrium. I just want to see more confirmation for sure. I need more movement, more price action here. Let's go look at 1 minute here on these. There's no SMT on the 1 minute. I don't believe so. 5 minutes. No SMT. 15. Probably no. Yeah, everything looks good in correlation here for both of them. Just ES hit that volume imbalance to me, and then hit that discounted wick. NQ's discounted wick is probably on the daily. Let's go look on the daily. Probably, yeah, I already ran through that. Bet. Yeah, NQ just looks a lot weaker. That's kind of why I wouldn't go long on NQ. I'd kind of wait for ES. ES looks a lot stronger for sure. So it looks like it's the one that would be more to the upside. Take a long on more probable. So yeah. If we can't find a trade idea here, I'm probably gonna get off the stream. Been going at it for like 2 hours now, around there. I need to take a break, I guess. I'm gonna take a break for lunch. Come back PM session. Probably won't stream. I'll probably be in the Discord if y'all want to join that up. Y'all can go to the description and a video. I think it's in the stream. We can go to the description, join the Discord. I'm gonna be doing intermarket analysis for this pair. I'm about to mark it out right now, actually. About to put it in the Discord so other people know what I'm looking at. So yeah. Do you guys keep hearing fight jets we have all week here? Fighter jets? Nah, I don't hear nothing. I go outside a lot too, I don't hear really much. Fighter jets, probably, I bet they sound crazy. Just I almost put yeet. I was finna put yeet. So that's what I'm looking at. Boom. No, that market maker bomb was paying out. Look at that, panned out perfectly, I guess. This would have been the trade, especially using the dealing range right here from this one. Yeah. Nah, it didn't really come into discount, so I don't know. If we can hit the standard deviation area, that would be very, very nice. Probably this one right here, though. Probably gonna be reached soon. So, yeah, that's pretty much it. Probably this one. Yeah, I feel like the 4 is gonna be reached soon. We can continue to rally again. Entry can be right here with this order block with a fair value gap in the making where that's been made. This would be your reaccumulation area. Come down. We start rallying up even further. This would be so smart money reversal here. Redistribution redistribution phase 1. Then we come back. Redistribution phase 2. And yeah. I think this is accumulate. No, this is accumulation. Yeah, it's reaccumulation. I'm tripping. I'm mixing it up. Whereby I see 130 base, you can see them take off, but never see fighters have all week. Saw 4th line information yesterday. That sounds lit. I mean, I'm kind of be scared, but I'll be excited at the same time. I'm like, damn, fighter just live near me. I'll be able to see flying one soon. Fair value up here. I want to see if this one can just get disrespected. I want the first one to get respected, of course. Always first one. First one always has to get respected for sure, for sure. I just want to see us come down a little bit. That's all really. We're just pumping up, man. Yeah, I don't think we're gonna go down. Where did I screenshot that? Yeah, okay, yeah. I feel like this would have been probably the best trade of the day. It just looks the most probable. Just gotta be patient. That macro's about to start hitting. Watch. Right, it already started hitting. Maybe we seek out this liquidity. We don't come back. That's kind of something you gotta watch out for too. But I think 12. As soon as 12 hits, I'm gone, guys. Alright. I don't want to see this fair value gap take hit. I just don't want to see it, man. Respected. I want the other one to get respected with the order block. There's more in a discount too. If we measure the range right now from this range, more in a discount. I prefer that one. I'm gonna just wait. I feel like this trade. If I was to take a trade right now, probably BAS or SPX. Euro chopping, GU chopping, CAD dropping. Oh no, it's actually rallying. Respected that market maker buy model from earlier. After hitting the buy side imbalance on the 4 hour. GJ, chop best on the JPY pairs. The cleanest one was after ES London high swept. Days of session high, I think. Minute 15, 5 minute F fair value got formed, and then tagged at dead center and then dropped this whole range pretty much. Let's go look at that if that is correct. So London session, Asia session highs. I would say these are let's go on the 5 minutes. Look at the 5 minute. So for me, 2 to 5 is London. So these are Asia session highs, I think. Tag them. London, create a range. I would say this is more of like a pre-market New York. Take the highs out. Are you talking about Euro maybe? Oh no, yes. I think it's different on the CFD charts maybe. So we are forming a fair value gap here on the 5 minute. So I'm gonna be watching to see that. And come and tag that and then rally higher. Of course. And then eventually I'm gonna measure the range here and see where equilibrium would be. Equilibrium would be right here. So I'd probably take a profit there if I was to take a trade. Of course, ladies and gentlemen. I'm not in a trade right now, but I do plan on taking one if we can get one right now. I wouldn't mind it. And then just taking equilibrium, probably these highs too. Take profit. Buy side liquidity. Just buy side liquidity on the 5 minutes. If we can get a rally down into a discount for that range. So yeah. If we don't, then that's normal. Normal if we can't come back down. This for the gap is getting respect. Relative equal lows. Pretty simple and sweet. I think we're just gonna come take these out. The 5 minute fair gap formed already. So let's mark this one out. I feel like this one's a little bit more probable for higher prices. Let's mark it out orange. There. Draw the midway. Oh yeah, I don't think we're gonna come down, honestly. ES rejected that 940 candle. London 5 minute fair value gap. Let's see, 940 candle. This one right here. London minute 5 fair gap. Oh, this one right here. You're talking about. I see it now. Right there, we tapped into it, rejected it. Right there, I see it. Perfect. That's perfect delivery, man. You're right. I just didn't see that. You're correct. Yeah, I don't even see us coming back down. Damn, we're just pumping. There's just no trade idea here. Honestly, the market maker buy model was perfect. Damn, I'm trading market maker buy models from now on, bro. Oh, they're just cold. Just cold, bro. This is like the best. With the 22 model, this would be your 22 model market structure shift, retracement back into the fair value gap. It could be an inverse, rally higher. Perfect delivery, bro. You trying to buy there? Ah, I see. You weren't shorting, you were just going long or what? During that trade right there? For the London Cibi, and then I see. You thought it was a bullish there or what? It happens, man. It happens. You got to journal and see what you did wrong there, you know? I would have wanted more. I would have wanted more lower prices for this market maker problem. I guess we just can't get it because we were just going too far deep. Now we got to go back up. Dude, I'm trading market maker models. I'm trading MMX with 22. 840 low. I was convinced by the chop, because I thought I saw a breaker on NQ low. NQ. You thought you saw a breaker on the 5 minute? I bought it there. I see. Probably. Oh yeah, this one right here. I would kind of see this as a breaker, especially right here. These lows get taken out. That's the high. Price lag. We come up side to sell side with the breaker. You're gonna expect it to be an inverse after, but it never happened. I can see that, bro. That was trying to trade the minute one opening, but it worked, but I didn't even run one dev. Didn't run one dev for this right here, right? I mean, I think that's why you have to have higher time frame narrative. Oh my goodness, it's just pumping. Yeah. I'm gonna chart this. I didn't take a trade here, but I would have if I felt strong conviction for this. I guess this is execution at this point. On any other day instead of Friday and Monday, I would have taken this trade. I don't know. I guess I just didn't feel the need to put risk on for today. But it still worked out perfectly. I know the whole time we have a beautiful market maker X model, the 4 model, and I'm still running impulsively. Impulsive? Yeah. You just got to zoom out, man, whenever you're about to take lower time frame trades. I would get stuck too on the lower time frames. I would expect price to go up when we're in a bearish environment. And I would just journal that. Or sometimes I'll take a bad entry with like an impulsive state of mind, and I'll journal that. You know, I was journaling a lot, and just recently, the journaling got a lot better, and I've just been reviewing the recent journaling. I've been improving drastically, just especially on the trade ideas, and why the trade idea failed on multiple time frames. Just viewing it on multiple time frames is probably by far one of the best things you can do. Zooming out, screenshotting the trade on the 4 hour, the 1 hour, 15, 5 minute, 1 minute, seeing what levels, why, what happened, the dealing range, premium discount, market maker models, using all these things to align the trade idea. Great, man. Yeah. It's probably one way to improve a lot is probably by your journaling and reviewing. That's one way, especially with live price action. You can backtest all you want, but if it's not live, I don't think you're going to get the real benefits. Especially with the entry confirmations, your emotions, the impulsive state of mind, your risk amount. All these things are very important whenever you're actually live trading in the live market environment. So you're always going to want to have to journal as much as possible and have the best journals. Entries. So we are coming down though, I want to see more of that 5 minute fair value gap get reached and tagged and bagged, and I don't know. We just swept all this right here. We come down to that 5 minute fair value gap, I'll probably enter. I don't know. I have a 5 time frame on chart. 1 day to 5 minute strap. Mini charts on MT4. Look like a breaker? Yeah, I can see why. I can see why, I can see why it looked like a breaker on the 1 minute. But eventually on the 5 minute, probably looked a lot better. But if you had that daily chart, you probably could have seen, we're just really bearish, Could have seen we're really bearish. We created a fair value gap today. That should have been your confluence for going lower. And then if you use midnight opening to Midnight opening offered it to be in a premium since we're bearish, you know. We opened up premium, we dropped. Open up premium, we dropped. Premium, we dropped. I didn't view it enough either. I didn't even have the indicator on during this time. I think I viewed it once, but I expected TGIF to pan out, so that's kind of why I didn't use it. But looking back now, it's kind of a bad mistake. I get a minute 5 unicorn here for shorts. Looks like a breaker. I think this one right here, hit right here and then drop. I mean, yeah, shorts do look probable. I want to see how we close later today, though. I would trade both sides of the range. I'll probably trade long and then get out. Trade short. I don't know. Crazy. I'll trade both sides of the range. Yellow. You know, you only live once. You gotta take those trades. Let's see. I didn't see that short setup low. Dang, I was thinking long. I mean, it's, yeah, you can trade both sides really. Today is kind of one of those days though. You don't want to trade. See, boom, boom. We drop. That's a breaker right here. Breaker formed. We can come up equilibrium of the range. This high to this low. Hit the breaker, then we drop. But for right now, we're more inside of a discount still. So I would rather see it come down here. Then we start to rally up here. See, look, we're disrespecting that fair value gap there. There's probably SMT though. I don't think so either. No, I don't think so. But ES looks a lot more probable. Trade idea here maybe. Take out those lows, relatively good lows down there. We can enter, boys. Enter a little long. Relatively good lows by that I mean right here. These lows. So yeah. I would kind of down the risk though, you know, I wouldn't risk too much. So yeah. I would want to see it stab more deep into it and then eventually we enter. You know? So yeah. No, I haven't. I didn't see that. I'll eat it right now. Alright, I want to see it stab more deep into there. Alright, we're not going to get that, I guess. So we're not taking out these lows. Even though I would want it to 5 minute. I would rather see it stab deeper into there. See long? Yeah, no, we're going to get longs, bro. Don't worry.
That's exactly what I'm saying. I need to lose weight because my face is not fat. I'm just saying.
I want to see it come down more.
Oh, yeah, I know, but I'm
Just being patient here. The macro's about to come to an end, though. So I'd be very, very, very nimble, I guess, because the lunch session's about to kick in. So I guess, you know, you can't enter strictly off of the fair value gap. You're going to want to wait to see a reversal happen after taking out these lows. Start seeing that reversal. Then come back down. Maybe make another fair value gap or use the inversions. And then eventually start seeing prices go higher. That's where your entry is with the retest on the second retest. And then you exit up here or in the 0.4 standard deviation. So you can see we're just tapping it. We're just stabbing deeper into it. This is where I would make a mistake. I would enter, boom, right there. And then I would have my stop loss. Where would it be at? Probably like fair value of low. But, you know, you need to wait for more confirmation sometimes. It's better to wait for more confirmation at times. You know? You know, if we make this an order block, then I'll take that. Or the inverse. So yeah, you can see we're dropping. Use all these as confluences. Consequent encroachment of this wick was respected. Most likely we're going to rally up now. This might be the retracement leg. Start to come up. Perfect. You know? But lunch session is coming, so again, I'll probably wait for shorts, guys, honestly. I would wait for shorts. But I think I'm about to end the stream here. It's already 12 o'clock. I'm about to go eat, enjoy my day. So yeah, I'm gonna continue to watch the charts though. I'm gonna see if we can get a trade idea. I'll take it. I'll alert in the Discord. So yeah, let me open it. I'll probably alert the Discord right now. See what I'm looking at. Mark out the charts real quick. So And then so yeah. Let the Discord real quick. See what I'm watching pretty much. So I'm gonna end the stream here, guys. I'll catch y'all probably on Monday, and hopefully everybody has a great rest of your day. Enjoy. Peace.